Friday. Give yourself a pat on the back. You've made it. You got this far, and we're almost at the weekend. Boy, I'm not going to lie. It was so great seeing all of you out there last night at the Options Live trading event with Tom Sosnoff. So amazing to meet you. R. Saxena, Sonali, Andrew M, Andrew Dutt. Amazing to all be there with you. It was so great to actually find the face to match the voice and the typing in the morning. Now, as you all know, Rich is still on the road, and I believe today is Dublin. So for those of you watching from there, you can catch them live tonight. It is spectacular. Many of us were there. Including actually my 9-year-old last night. Many of you met her, and it was quite funny actually finding out what she thought of the event. I'll fill you in later, but let's just get you across the pack show. Today we have a very special guest who's going to be joining us very soon. Chris Beecham, our Chief Market Analyst here at IG. He's going to give us a quick overview of what to look out for, what's tradable, what's moving or likely to move in the coming week. And also a little later, from around 8:30, 8:15, we've got Luke Moore, 9:15 even, live from the trade desk. Now, many of you saw Luke yesterday. You probably saw the long line of people trying to talk to him as well. Well, you have a second chance. If you didn't manage to ask him a question last night, do dial in and give us your comments on the comments page. We've also got a really key market measures for you. Those of you trader friends that thought perhaps, whoa, as you're watching Tom go through the Tasty Trade platform and kind of thought after it like you'd been hit by a train, don't worry. Don't worry, because most people feel like that when you meet Tom. But also when you see that platform for the first time, you have that, whoa, there's too many things going on. What are all these numbers? But actually, that's a good thing because it means that you're processing. And for me, it took at least a week, 2 weeks, 3 weeks to kind of understand what to look out for. And once you know which 3 areas to look out for, we'll take you through it here much, much slower. Let me tell you, because even that was too fast for me. So we'll slow it down for you. But all of those that liked talking about those strategies yesterday, and you came up to me and said, you know, what exactly was he talking about when he said iron condor and all that? I'll take you through a very basic explanation in market measures. So we've got all that to come. Just to give you some oversight as to how wonderful it was when I saw all of you. I also was being asked some very funny questions. Like my 9-year-old daughter was asking me things like, hey, why is it all these people are queuing up to talk to you, Mummy? And then she didn't realize, and I didn't realize as well, that there was that big screen. I didn't know Rich, good job Rich, had put up the sign to kind of show both of us and when our shows are. And she then went, why are you on the screen? So that was also the other interesting bit. She absolutely loved meeting all of you. Such a privilege. One particular comment that I had from the many of you that I met, which I found quite funny, morning everyone, was someone came up to me and said, morning Monkey Man, this one's for you. Someone came up to me and said, hey, really love it, watch your show. I'm not Monkey Man. That's great. So I was actually hoping it was Monkey Man. Monkey Man, were you there? Were you actually there secretly? Come on. But it was wonderful. That made me laugh out loud. The number of people that came up and said, we knew you were in the room before we actually saw you because of that laugh. Thank you very much. That really made my day. But even better than that, I love the fact that you came up and said, hey, this is super useful. Thanks for taking it slow. Thanks for, you know, taking us through it, because, you know, some of us don't quite go at such speed. We will. I promise you, you will, and you will get there. And, you know, if my 9-year-old can process all that, she said, how it's great. How do I remember all that? I said to her, I don't remember half of it. So don't worry, is the message. Some questions and comments on the box over here, away from the numbers, saying happy Friday. Truly, I welcome that as well, because as you can tell, I am feeling quite hoarse at the moment after last night, as well as the PCMs as well. Also, Rich McDonald saying, morning all. I'm in City Airport, he says, about to jump on the plane to Dublin for the last night. So for those of you who didn't catch the last 4 nights, you still have a chance. Dublin is the next event. And also, Julian Musto saying, love the show at Neon last night. Hey, Julian, I think, did we meet last night? I think we did. I met a Julian last night, I'm sure. Matteo Di Napoli saying, morning, guys. Thanks so much for tuning in, because Rich is away. I'm truly on my own here, people. And Fred is at a wine convention. And Caleb and Terrence are with me, which is amazing. Shout out to Caleb last night. If you didn't see him sitting next to me, all-star, because he picked our seats and he knew how blind I was and I have astigmatism. So I love the pictures last night. Yeah, Terrence, like, he picked literally the seat for her, literally directly in front of the screen. In fact, he just sent me the photo and a video. Let's see if we can hook this up for you, if the tech is working with me. Let me get a full screen. There you go. That's a scene from last night as we arrived quite early, but it soon filled up. It was standing room only. There I am in green. And now let's go to some of the pictures for you last night. Here is Kayla. Well, let's go to the stage first. This is the stage where they were presenting Tom and Rich. And doing a great job, might I add. Great crowd last night in London. Very engaged, asking all the right questions, talking about NVIDIA. I will be looking to sell puts on NVIDIA later today because, you know, I don't want to take off my position. But, you know, the options front gives you a way of also kind of covering. What I like about it is it helps you cover your back. Here we are, Caleb and Richie Rich, and looking amazing, might I add, after, for Caleb, 4 days of being up super early and helping me carry it solo here, and Richie Rich looking wonderful as always. And here he is in his trader coat. Caleb went up to Rich yesterday and said, oh my goodness, it's you, Rich. Oh, can I take a photo? Can I take a photo? Oh, I bet he loved that. Brittany, the true guru behind the event space for us, is the one with the blonde curls there. She is, let me try and zoom in for you. She is literally the person that helps everything works seamlessly, and she's in the boiler room. And she's the one that on, I think it was Tuesday or midweek, was stuck in a lift, and she was trying to call for help from this lift that stopped working. And everyone else was having dinner, and they turned off their phones were on silent. So poor Brittany was in the lift for 30 minutes, I think. I think she's still going through therapy for that. But it was such a great night, so good to see all of you. And let me try and get out of that space. So we're going to go to overnight action soon, but we'll have more pictures from the night because we've got a picture of myself with Arsax and also Sonali and Badi. Welcome back, trader friends, dirty dogs. This is the overnight action, the part in which we go and give you a sense of what happened whilst you were sleeping, right? So the very first one that we're going to talk about today is Powell says the Fed doesn't need to be in a hurry to cut interest rates. Now, I really like this story because, and I'm interested in this because I love everything to do with interest rate futures. What's key here is, remember Powell last week said, I'm not stepping down, not going, I'm not going. Then there was all that expectation, of course, that he was going to say more on Thursday after that very intriguing comment? Well, he came out and said on Thursday that the US is still in a strong place. Economic growth remains robust, and this will allow policymakers to take their time in deciding just how far and how fast to lower interest rates. What's key here, people, trader friends, is to remember that we had very, very low prints in the summer period for inflation. All this means that if we have this Trump inflation coming our way, and that boosts the expectation that rates will have to be ramped up to push down inflation, the dollar will rise. And because inflation is expected to rise due to his inflationary policies, that come summer 2025, we're going to see a very high print because it's versus a very low base, right? But Powell here is saying, calm down, guys. The economy not sending any signals yet that we need to be in a hurry to lower rates, he said in Dallas, and also added that they're not in any hurry. So without further ado, Chris Beecham joins me in the studio right now like magic.
I was very impressed. You were clearly trying to keep going while I was in the corner of your eye.
You were very graceful.
Yes.
He's like a
Move very silently.
black leopard.
Whispering death, that famous West Indies bowler. Holdings, Michael Holding?
I've had 30 years of this, and that was impressive.
Thank you, thank you. Imagine if I'd gone over, there's this carpet, imagine if I'd tripped up and gone flying.
And photobomb me in the back.
Yeah, it still would have been graceful, but...
So what do you make of, I mean, the Fed's been really, really vocal of late, right? JP, what do you make of these recent comments? Is it a case of going, hey, Trump, buzz off, this is my
We covered this on Monday, didn't we? We talked about Powell on Monday and how I'm not going anywhere. Yeah, it's really interesting, and you've seen the CME FedWatch expectations for the December meeting coming down from sort of 80% to 60, although they still, I think everyone's expecting them to cut in December, maybe to pause from then on. JP Morgan saying overnight, maybe this means that you won't get another cut in January or when they next meet. Yeah, it's kind of no change from Powell, I think, because the message has been the strength of the economy, we don't need to rush this, and that makes the 50 basis point cut look a bit odd, to be honest with you. It's not ideal, I think. It doesn't, remember, because back in August we talked about panic rate cuts. Remember those people going on CNBC and saying they need to cut rates now, the market's down 10%, blah, all this nonsense. And then you had a 50 basis point cut, and now it's back to calm prevails in the world of central banking, which is how it should be, of course, because the thing is with central banks, you don't want to be rushed into things. And this is the message you're getting from the Fed is, why would we need to move quickly? Unemployment's in a good place, inflation's down. Yes, you've got a new administration whose policies could be inflationary, but we don't know what that is yet. How quickly will the tariffs come in? Will they be introduced? There's people talking about Trump may be introducing tariffs on a sliding scale. The more you do as he wants, the less you get, if you to put it that way. So it might not be that you get this sudden huge surge in inflation from January that the Fed needs to respond to. It could just be we cut in December and then we wait and see.
How about the case for the summer? You heard me talking about the the print this year.
Comparative.
Yes.
It's always the problem, isn't it? That's the problem. If you do, it's like any company. If you do really well in one year, you've got a tough bar to meet the next year, and that just makes life a lot harder, and then makes performance look poorer by comparison. So yes, I think that's certainly the thing to watch for, and the core inflation is running above where they'd like it to be, clearly. So that it does make their life more difficult, I think. If you look at where the dollar's come from over the course of the past week, it's had a fantastic couple of weeks, to be honest with you. 1 year highs, further gains yesterday. We nudged above those April highs. I don't know if you can see my chart on the screen, but up towards 107, the next thing to watch for. Not seen since October of last year. It's a huge, huge recovery there, and no sign of that slowing down either, really.
It's huge. I'm putting up the dollar basket for you. I am bullish the dollar, and I am so. It's
always easy to be bullish something when it's gone up massively, though. That's
well, the key but it's also into next year. I just think that, you know, with the policies he's talked about and how it's going to affect the market, and also speaking to my 31 first cousins, spread across the United States and Canada.
It's not like having a good broad base of opinion.
Yeah, who needs a poll? I mean, I've got an
Have you weighted accurately? Did you ask them how they were going to vote? That's what I want to know. Did you ask them how they were going to vote?
Of course I did. Of course I did.
And what did they say?
All the ones on the East Coast were blue.
Right.
Don't have to ask the ones on the
West Coast.
Yeah.
Because it's obvious.
Well, other than New York, right?
Ah, yeah.
And then I said to the Tasty guys, I was like, I got loads of family, East Coast, loads of family, West Coast, not much in the middle. And like, you got us now. And I even polled the people in Chicago, all those people that I met there, and they were saying that, it's feeling like a shoe-in. And that was across the board.
What, for the Trump? Oh, well, okay.
And this is the evening before.
Oh, well, yeah, the evening before.
And also, like, if anyone voted sort of after the polls in some states opened by the 26th of November, so that was like the weekend before. If anyone voted after that weekend, it was like ghost town. I mean, I had cousins saying that they were driving by these voting centres.
And there was nothing. Because everyone had voted.
Yeah.
It's fun, isn't it?
Yeah. All done. I mean, you know how much real estate, how much space they have there, and how easy it is to get free parking. They said if you parked your car, voted, went back to get your car, you would have spent more time voting. It was that quiet. And then, I mean, the rest of the time, I mean, they're still partying. I mean, I was showing Isar pictures yesterday, even still yesterday. We're having not just weekend parties, people. We're having parties during the week. And these are like Trump win parties. And all that requires lots of driving around, lots of buying food, lots of buying stuff, lots of buying flags, more flags, right?
Yeah.
And we're coming up to Thanksgiving, another inflationary period. So I just think, also let's take a look at dollar yen as well.
Yes, the great recovery goes on. It's fantastic. Just when you thought a trend was down and out and was done for, it's back again.
Yeah.
It's fantastic, isn't it? And
155 level.
155, BOJ talking about it again, currency intervention on watch. It's amazing how we come back here after the summer. We thought it was done, we thought it was dusted, the Fed was cutting, the BOJ was hiking, all was to the downside in dollar yen, and never underestimate what markets will do, because again, it's that classic moment of you hold a ball underwater in the swimming pool, and then you let go of it. What does it do? It comes up, it smacks you in the face, and there we are. If you short
How many times have you held a ball underwater?
Well, I have done it a couple of times, enough to test the theory. I read it somewhere anyway.
Is that why your forehead's so red?
Yes, exactly, yeah. Yeah, so that's...
Right, let's go to the next headline. Let me just get it up for you. One of the other key things we've been talking about this week is Tina versus Tara. And, we are now at extremes. Three drivers of the stock market's bull rally hitting extremes and point to lower returns ahead, says an economist talking about...
Oh, David Rosenberg,
yes.
He's my favourite. Oh, if there was a man that's uber bearish all the time, it's David Rosenberg. Oh. Or Rosie, as he's affectionately known.
Rosie. Do you think this time round any substance in those comments? Tom is a contrarian, and many of our viewers and trader friends at the event last night, Tom was saying that he holds this, he loves the contrarian. He is a contrarian trader. He is bearish Tesla, bearish some of the major indices.
Right.
Are we near a top, or are we still going to see this continued melt up?
If we had a crystal ball, I would tell you. The point is, people like Rosenberg come on and they say the market's going to face a tough time, they can't go higher, the markets are expensive. That you can't argue with. Look at the P ratio, look at the cyclically adjusted price earnings, and CAPE, it's the one that everyone gets trotted out when everyone's talking about this. Yes, and there's no reason why they can keep going up any further, but earnings will be what drives it. There is full of expectations of further earnings growth. Now, the market has had an incredibly strong run since August, if not since earlier. And we haven't had a major correction, call it pullback correction, bear market since 2022. Like far the market's come in that space of time, which means we're kind of overdue one. But people have been saying that markets are due for a period of weaker returns for years. And look at where we are. 21,000 on the Nasdaq 100, 44,000 just recently on the Dow. There's no sign that this is going to change direction in any meaningful form in the long term. And the point is, they get us on CNBC because it's interesting to say this. Markets facing a tough time. Well, it's not hard to say that. They've gone up a lot. But where's your catalyst? What's going to be the driver? And it's not the thing that everyone sees coming. I get this all the time talking to clients. Actually, it's, oh, this will make the market go down. No. If you can see something coming, if you can see why something might go down, that's not going to be your problem. Something else that you haven't seen coming will drive it. Like August, like the Bank of Japan. That's the summer crisis that we didn't expect to happen. And that's the kind of thing we're looking for on a more sustained basis. So yes, markets are expensive. They're the most expensive they've been since the end of 2021. Cue dramatic music, because we know what happened next. And they do maybe look ripe for some kind of sustained post-Trump election hangover, maybe into the first quarter of next year. Does that change the longer term picture? Don't know, but I wouldn't bet against it.
And this is true, isn't it? We talk about this all the time. Markets are truly random. I mean, some people say relative. It's just random. You can't expect, what is going to happen. They don't owe you anything. They don't care if you get smacked in the face. It can go up as well as come down. And that's why we have all these tools in the IG platform where you can look at expected move. You can look at implied volatility. We talk a lot about history. Our friend here is a great history buff. Chris loves a bit of history.
Yeah, to say the least. Yeah. Markets go up and down, not up or down. This is always the important thing to remember.
And stocks and markets don't shoot up. Trees don't grow up into the sky.
The cliches are thick and fast.
Well, you have to. So we have a few questions coming up here. First question of the day from B. Hass, if you can. He's asking to review the DAX, if you can. Chris, what are your thoughts on the DAX?
Well, this is a fantastic recovery yesterday for European markets, and particularly the DAX. And the DAX is looking better than, say, the CAC because it's, as I look at it, it's above key moving averages. It continued to rally its record highs, whereas the political worries have sunk the CAC. So, yes, look at that trend. It's had a period of consolidation over the last few days. I would still argue that clearly the trend, I think you can't argue with the fact it is moving higher. It's still above the highs we were at in the summer, which is another encouraging sign, really. That's early September high around 18,960. So it dipped briefly below it. Sorry, I can't get my words out this morning. Briefly below it, but 19,000 has been kind of your line in the sand over the past 2 or 3 months. But certainly the trend continues to remain supportive. We saw a bit of buying yesterday that might be encouraging. I think it's a good sign. Yes, you've got obviously Germany in the elections next year, so there's a political worries certainly coming into the Eurozone as well on that front. And you've got the new administration. Will they impose tariffs on not just Germany, but of course with China, and Germany being a key trading partner. So you can see why, again, there are reasons to be cautious about the outlook for the DAX, but the price is the only thing we're going on at the moment. Even look at the monthly chart. It's a fantastic chart. It's had a notable recovery. Look at where it's come from. Yes, and it may not have done as well as the Nasdaq in percentage terms, but nonetheless, it's a very, very impressive performance from the DAX, and so far looks fairly solid.
For those of you that are looking for pairs trade, the DAX tends to pair trade really well with the FTSE. We just have a minute left, Chris. Let's have a look at one that is close to my heart, which is oil. And we have a question here as well from Quick Gas Services. Loving your moniker, whoever you are. Wondering whether you are from the oil and gas industry or have some sort of background with that name, Quick Gas. Quick Gas is asking, any thoughts on ideas on gold and silver? We'll get to that, but let's talk about oil first.
Oil first? Yes, another miserable week for oil. It's Chinese demand that's really weighing here, I think. The Middle East headlines give you a bit of a bounce, but it's where's the demand coming from China? The answer is it isn't, and that is putting a lot of pressure. It's the worst week for oil, I think, in a quite some time, to be honest with you. And if you look at WTI, we're now down at 67.20. This is kind of the level we got to in late October and also in right at the end of September. So again, with technical analysis, with charts, we're not saying if this goes through this, it will be the end of the world or whatever. But it's in a level that was important before. It could therefore be important again. It's just worth watching from a levels point of view. And then just below that, you've got early September. But really, again, I tend to use moving averages as a sense of, it gives me a sense of where the trend is going. At the moment, that trend is clearly down. You've had a lower high by the beginning of November. That follows up from one in October. So the move to the downside is clearly there. And I don't think there's much to really change that on a fundamental basis. And if OPEC let these voluntary production cuts roll off next year, everyone's going to desperately start to try to produce more, and you can see why oil comes down, which, not to be difficult about this, but that would torpedo your inflation thesis slightly, because it would at least take one bit of heat out of the readings.
But the thing is, we are, on the ground, the US economy is so hot.
Yeah.
And also, I just think oil is another worrying factor because, this is happening in a time when oil is already really low. I mean, low.
The fund manager survey yesterday in Bank of America, allocations to energy stocks are at their lowest in months and continue to fall. So people are perhaps understandably bearish on oil stocks, which is interesting from an evaluation perspective. That's not a buy recommendation, of course, to say you just go in and blindly buy oil stocks. But the fact they are quite unloved is always something that should make you go, that's interesting.
Yeah, and also they're great divvy stocks, aren't they?
Yes, you can't argue with them.
Just whilst he's going to show you his come up with his list of the great divvy stocks, I'm going to show you my chart because I'm going to show you exactly what Chris means. Oh, we have to go to break. We'll show you this when we come back.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
People, welcome back, you dirty dogs. We are just 2 minutes from the open. Chris, what are you expecting to see early this morning? Some of the big ones, I guess, reporting probably out later, but it really is all about Forex and indices and lots of broker ratings as we head into the open.
Yeah, grim start for European markets really after yesterday's gain, so that's interesting. Also, a bit of pressure coming through in the US, no doubt, on the back of that Powell update, really. Some of the Fed, not necessarily taking away the punch bowl, but really pouring a bit of cold water. I can't do words this morning. I'll just go back to writing things. It's easier.
Okay. That's like my life, really.
Yeah, pouring cold water on more rate cuts. It's taking some of the froth again out of US indices. But yeah, I think it's going to be an FX kind of day. You've got US retail sales later, so it's the only real economic data point of note. But yes, the one I thought was quite interesting was Burberry, to be honest with you, soaring after yesterday's results.
30 seconds to go. Let's just take you some of the early indications, people. This is definitely not confirmed. This is just an early indication. Antofagasta indicated up almost 3%. Fraser's up 2.3%. Howden up 2% as well. Also taking a look at the Schroders and SSE for Rich. SSE indicated up almost 1%. Schroders up 1.2%. Sainsbury's up 0.5% there. 10 seconds to go. Some of those indicated lower include Unilever, Berkeley, Reckitt Benckiser, and EasyJet. Right, and we are off. There is the opening bell. We are looking at a slightly risk-off start at the moment. Tech 100, Wall Street, all lower. Germany 40 down 0.5%. FTSE also down 0.5% there. Getting my watch list up right now for the FTSE for you, which I built myself. Right, so we've got on the leaders board, Pershing, Frasers, up, as I said earlier, that was indicated higher. Reckitt also slightly higher.
Land Securities, the upgrade to a full year forecast, so it's doing 1.2%. So decent numbers there to about dividend stocks, of course, one to watch there.
Let's take a look at the losers then. GlaxoSmithKline down 3%.
Nasty.
BAE Systems down 2%. So quite a lot happening out there. I'm just taking you through some of the broker ratings as well. Aviva raised to buy at HSBC. Burberry, you talked about that earlier. Let's see if we've got a move on Burberry.
Absolutely stormy move yesterday, 17% higher off the back of those numbers, which weren't great, to be honest with you, but that's a classic case of you had such bad news all the way through the year that there are bound to be a lot of people maybe, and I don't want to, this is a classic analyst, I don't know why this has moved, so I'm going to blame people closing out the position as short covering, but that could well be it. It's people just closing out some shorts after, well, it was a fairly mixed update from Burberry. And as I said at the beginning of the week about if you get a lot of blur at the beginning of an RNS, it means there's bad news to come, and lo and behold, there was awful news from Burberry in terms of it swung to a loss, I think, didn't it, yesterday. So really, really poor figures there.
Which actually makes me slightly perturbed and confused to read that after all that, Burberry's raised to neutral at Mediobanca.
Well, bad news in the price, I suppose. That's always the key thing to watch for, really. It's a bit of a kitchen sinking exercise, I suppose, from Burberry. All the bad news is now known. Maybe some optimism about China. Yeah, get it in there. And then, lo and behold, you got your 16% bump in the price. Does it go any further? That's the key question here, because clearly if you dip bought in Burberry a couple of weeks ago, you've done fantastically well, you know, with 300 pence higher than where we were. But look at that longer term trend and it gets grimmer and grimmer the further you zoom out, really.
No, I had one of Luke Moore's clients asking me, you know, why did you come out of Burberry? This was before China Tuesday. I think
come out short or come out long?
No, I came out completely of my long trade before China Tuesday because he was laughing, and I think he's got 60K in Burberry, and I said, well, I just felt like I got to the end of my thesis for Burberry, looking at just the fundamentals and looking at the signals, and I thought I can't stay in any longer. No. So,
and of course, bid talks lifting them as well to an extent.
Of course, it hurts when China Tuesday happened. It really hurt. But we talk about psychological bias all the time, so it shouldn't hurt. Right, AstraZeneca, I'm hearing Caleb tell me.
Second biggest company in the FTSE 100.
Down now almost 2%, adding that to my workspace. This is the 1 minute chart, people, so that you can get a better view of that.
Panic too much if you see that.
Yeah, 1 minute chart. It is down around 2%. AstraZeneca, they're one of the ones that we've covered a lot this week. And the latest news as well from AstraZeneca and that space, is that the Soros Fund Soros Fund Management raises its share stake in AstraZeneca by 8.2%, but dissolves its share stake in United Health Group. This is according to an SEC filing. So for those of you that trade pharmaceutical stocks, be wary. Be wary of all these, sudden filings.
Yeah, this new health sector in the US could be very interesting, of course.
Not be
Make life a lot more easy.
as interesting as the head of defense.
Ah, yes. Fox presenter. But also he was a non-commissioned officer in the army, so it's not entirely... And this is Trump's appeal, I think. People will say, oh, well, you've had 15 years of employing experts in charge of the military. Maybe it's time you gave someone who wasn't a senior officer
A chance.
Yeah.
And also, like, I was thinking, if he called up, you know, someone like Putin and said, you're going to talk to my head of defense right now, like, Putin wouldn't know what to expect, right?
Yeah.
It'd just be like,
Always do what your enemy least expects. It's a classic military aphorism.
Yes, but what a shock and surprise.
Shock and awe.
Shock and awe. Also, GlaxoSmithKline also on the move, talking about drug stocks, also down 2.9%. These are all companies that were loved during COVID.
Have you seen Moderna recently? That's a terrible performance for them. Sorry.
Moderna is my favorite ticker of all time.
Why? MDNA?
mRNA.
mRNA.
But also, you know, it's been so volatile for these stocks after COVID. They've been trying to diversify, and we've seen a real bifurcation here, haven't we? Those that have gone down the oncology route to try and find oncology drugs and treatments, and those that have gone down the obesity and diabetes type drugs. And GlaxoSmithKline here, another example of, you know, how tricky it is. What we're getting here from the day before is that we also had news from the previous session, vaccine makers, packaged food companies sliding as Trump taps RFK to head the health agency. We talked about this earlier. This is potentially a follow-on from that reaction. Because BioNTech, Moderna, actually none of them were spared, were they?
No.
Most of them were
It's the baby out with the bathwater kind of thing, really. But then GSK is a great example of when you're lucky enough to be invested in a broader index, you don't get those swings and arrows, because if you look at the performance of GSK, it's gone nowhere in 3 years since we're back down to the lows of late 2022. We're not that far off, really, from the lows of early 2021. So it's been a very rough performance. The thing that speaks in its favour, of course, is the dividend, because it will at least give you that income, even if the share price performance has been, unfortunately, dire. Over the last 5 years, total annualized return of 0.5% a year. So it's not really great. If you took the dividend out of that, you'd be firmly in negative territory, but at least the income is coming through there.
Yeah, one that is marching really higher, more than 21%, actually almost 22% now, is Evotech. This is also a Pharma, I believe, AG, and also Evotech. This is a German drug development company, up more than 21% now. After the biotech company Halozyme made a 2 billion euro buyout offer to the company. So this is an M&A play, people. And also, those of you that cover and trade pharma stocks, this is really an interesting time for the sector as a whole, because we are seeing M&A start to kick off in the sector, and this is just one of a few that we've heard recently. Evotech, have to say, if you look at its share price, rather still quite low from its 18th of October highs at around 2021. So just be aware of that it has really slid from those 2021 highs. So this bump, you know, good on you if you foresaw that. But you know, this is a downward trend.
This is the problem, isn't it, really? You're buying these small farmers in the hope they get taken over, but as you can see, it's been getting cheaper and cheaper, and doubtless the bidders have been thinking, well, I won't buy it yet because it'll get cheaper. And then, okay, you've got out at a much better price than you would have done, but it's definitely not been a great performance the last 2 years.
Yeah. So, R. Sachs, lovely meeting you last night. R. Saxena was at the event yesterday, and she's really keen on defense stocks, adding BAE Systems, which is down 1% to the chart. This is the daily chart here, so you can see.
Amazing performance of the last 3-4 years, though. Fantastic.
Yeah.
fantastic rally.
And also, she was asking today, why are BAE Systems Rolls-Royce falling recently? I think it's just they rose right after the whole Trump sort of euphoria, right? And the whole kind of all the murmurings he said about, you know, we need to boost defense, and then also saying that everyone in Europe
needs to pay more.
You need to put more money into the pot, people.
He's not wrong.
Right? Chris's view is he's not wrong.
Sorry, it's one thing I've always agreed with him on is that
muttering next to me.
You can't expect the Americans to keep picking up the tab. I mean, it's ridiculous.
And so this is just coming off, as I say every time, when you trade these stocks, anything to do with Trump, you know, be aware that it is going to come off. It is going to come off that, you know,
news is in the price eventually.
Exactly, and it's in also the rumor and the price. Once it happens, you know, pat yourself on the back, quickly come out. We saw the same with Core Civic and also the other prison infrastructure builders. Spoke to some mates in Austin, and they were saying that no one wants to say anything because there are a lot of people there that are working for the prison infrastructure industry. Well, they call it detainment. Don't call it prison, just call it detainment. Or
detainment management, something grim.
Or the other one I've heard a lot is processing facilities. Processing.
Grim, grim.
They're not saying anything because they're kind of sitting there thinking, well, more work's going to roll through the door, right? And so back to defense, also taking a look at...
BAE is up 55% since October. So I think if you're expecting to go high, you're probably not wrong, but consolidation. And this is the thing about, we talk about trends. You've had big gains. The market has to digest this stuff. I think it takes a while to consolidate, and you had the news about Trump. I think if you think defense spending in Europe will go high, you're probably right, and that should benefit BAE and others. Yeah,
and we talked about this earlier as well last week, Chris, because we are really interested in I like military history. It reminds you of how often humans just forget.
Yes, same thing repeats itself so often again and again. Yeah.
Hensel people, I talked about this with Andrew Duck yesterday at the event. Lovely meeting you. Thank you so much for the hack. We exchanged loads of notes and also I spoke about Hensel. Have a look at this one because many fund managers have this on their books, although they don't talk about it. And I'm telling you, this sector moves in tandem. So this, as you can see with the share price, mimics kind of how BAE Systems moved, right? And
tends to get a bump very early in every year, 2022, 23, 24, really Q1 bump, and then it doesn't really do much for the rest of the year. So that's an interesting one to watch, particularly how that plays out.
Let's check it on Northrop, which is US 1. And I know it's not open yet, but I'm just trying to show you the pattern, people. I'm just trying to show you the pattern because you'll see a similar pattern there in the last few sessions. Because like Chris rightly said, everyone needs to process this. You'll have, you know, loads of, you know, algorithms in place too.
Yeah. Nothing, no, like you say, trees don't grow to the sky. The trend can't keep going on. It rallies, and then it will have a period where it just digests all the news and factors in, and people look at it again, and then it moves off again, I think is the way to go. You don't often get, NVIDIA accepted, stock prices that go up and up and up and up.
Don't jinx.
No, I know, sorry.
Sell puts later on today, yeah.
Gone up lots, therefore it must go down. I'm not sure I agree with the thesis, but yeah.
The retired Angeline is getting quite worried about this Angeline. The retired Angeline. Yeah. Okay. So let's have a look.
Those two get closer together every day.
Yeah, they do. What is it saying? You're only the youngest you are right this very minute. Something like that. I say that as Chris is laughing with me, not at me. Let's have a look as how the European session has shaken out. Taking a look at the France 40 on my list.
Poor France.
Poor France. We can say that because Fred's not here. Teleperformance up. Let's start with the gainers first. Renault also up slightly, but it really is a risk-off day over there. Sanofi down more than 4% amid that weakness across the board with most pharmaceutical stocks.
Dassault as well.
Yeah,
off quite a bit.
Dassault is also down 2%. Capgemini down 3%. What's going on there? What's going on with Capgemini? L'Oreal down 1%. Airbus down 1.3% as well. And Thales, as I said earlier, the sector, just like luxury, they tend to move. It tends to move like a herd.
Well, yes. I mean, most sectors do, though, don't they? I think is the way to look at it. The things tend to move in waves.
Some of them don't like it. Like miners, you have to be very careful to sort out all the different miners, and some of them, don't move as you expect.
No, I suppose it depends. But yeah, there's an element certainly with defence. Everything gets bit up together. But France 40, another example. If you've gone dip buying in France, you've been dip buying for months and with no avail really. Whilst everything else rallies, I think. Still poor performance, and that's geopolitical. It's political worries about France. I know that's dropped off the radar quite a lot in terms of the headlines, but there's a sense of a lot of uncertainty about where the French state is going, and it continues to weigh on the index particularly.
Let's take a look at the FTSE now to see how things have shaken out. Land securities up 1.7%. Sainsbury's also up there. What do you think is going to happen this coming festive season? Do you think you're getting the vibe? I get the vibe that it's going to be flat.
I come on this show and it's an avalanche of relentless bearing. Really, it's fine.
I'm normally the optimistic.
Yeah, I know. Well, maybe because Rick is off, you have to fulfil.
I believe you just said to me, and this is pipe down. I'm normally optimistic. I just think that have you been to I hate shopping, as you can tell by my shopping. I hate shopping so much that the last place I worked at had to hire out a stylist, and
you've been angling for one ever since.
I have been. I don't get one here at IG, but the stylist was there because I truly would rather be looking at the charts rather than lining up somewhere, and nothing kills my soul more than cash tills. But I still go in to do my market research, and I go in to have a look at what's happening on the shop floor, like I did in Chicago with Walmart, Costco, and Home Depot. I did, and was horrified when I saw that not only
did you call it a Home Depot, not Home Depot?
I call it Home Depot. Same difference. It's just B&Q on speed, isn't it?
Yes, that's one thing to say. Sainsbury's, though, terrible performer recently. Share price has gone nowhere for months.
And also, have you noticed recently that they are kicking off the half price, special price offers super early this year? I think I saw 3rd of November. Well,
it's all about sort of gaining market share, isn't it, ahead of Christmas? You want to get eyes front and centre, make sure people see it. So because it's a volume game, supermarkets. It's, again, I think we mentioned this on Monday, it's a margin thin world. And you have to really
painful. Margins are painful.
Yeah, it's you really have to compete on the smallest amounts to get that edge over your competitors.
I mean, look at that chart there. This is Sainsbury's, people, whacking up my Sainsbury's daily chart. I'm going to be shorting these grocers heading into, I think, once we start getting the early results coming out in around January after Christmas?
Yeah, the early January is when, I hate early January because it's all just everyone reports Christmas trading statements in the space of a week. I think it's not
3
helpful.
days.
Yeah, it's not helpful. You get weeks where nobody reports anything and then everybody reports. How is that helpful to investors and poor beleaguered market analysts who have to write this when you get everybody reporting on the same day? But yeah, Tesco as well, really.
Yeah.
Helps. I think Tesco supported a bit more than Sainsbury's because it's just the biggest and that gives it a bit more of a muscle, really. But again, a lot of the good news was in the price there. Tesco, you can see it's been really pressured all the way through September and October. Interesting enough, just as the mood music on the UK began to shift for a while, and that's come back again, really, with the budget.
Right, so we got Tesco. Just having a look at the indices quickly. Chris, do you just want to go through them?
Sure. Another more weakness, I think, across the board in tech, particularly down after Powell's comments yesterday. A little bit of an improvement fractionally for Europe after that poorer open. I think there's quite a bit of bargain hunting going on, particularly in Germany and to a less extent the FTSE 100. So that's an interesting one to watch maybe if yesterday's bounce gets a bit more momentum. because it's certainly been trying over the last 24 hours or so as one to watch. A slightly better start to the day for the indices. US still on track for a fairly poor open though. So, and again, China overnight was miserable. Really, there's no shortage of bad news coming out of China. Really, so it's not helping matters. But yeah.
Yeah, that's right. China October retail sales rose 4.8%, but I think it was still not able to lift the mood there.
No, it doesn't really change the dynamic over where's the catalyst coming from, and that's always the question you have to. What's the story that's going to drive the next move here? And I suppose, to be fair to people like David Rosenberg, that's what he's saying is, what's the story that can drive equities higher from here, and he doesn't see it.
Right, we have a break coming up and we will talk about that in Confirm and Send. Rise and shine with IG's new morning show,
Trade Live with IG.
covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Welcome back, everyone. It's us, Chris Beecham and Angeline Ong on Confirm and Send. When we ask all your questions, none too hard, none too difficult, just whack them here.
It is a Friday.
It is a Friday. Ask at IG.com, right below Chris's handsome face. Smile, please, Chris.
I am smiling. It's my smile.
And we will get them answered. You might go, hey, Ange, why is it you haven't answered it? We will get to it. There is a strict Fred queue going on here. Tiffany, call out to Tiffany. I did have your question. I did try and get it in yesterday. Matt and Tiffany are our clients, and their wonderful PCM is Luke. And I said, it's on the list. I can't get Fred to like jump queue here.
Questions will be dealt with in the order in which they arrive.
Exactly. This is Great Britain, where there's
Queue.
an orderly
You have to
queue
queue. You
of
can't
one.
jump the queue.
Orderly queue of one.
Love that phrase.
So, let's whack up the first question, because this is from Tiffany. What is a stop loss order? How does it work? Right. I'm going to explain this like I explained it to my 9-year-old.
Oh, I'm looking forward to this.
Some of you met her yesterday. I was just saying to Chris, because Chris was like, how are you feeling? I'm like, I feel rough.
Drained.
I crashed before
Exhausted.
going back out because I had to grab her from school, get her back out to the event to meet all you good people yesterday. And also she was interested, so we have to feed that fire whilst we still have it.
No, you just
And so I said, I crashed yesterday for an hour, and it was like, I felt like the rock at the bottom of the Mariana Trench. That was how I had to wake up and then get back out there. But I did prepare this for Tiffany before I left. And I've got this up on my screen. Caleb and Terrence, you want to punch this up? I have drawn this out for you because, like we often say, markets don't care about you. Markets don't have any feelings. They'll just whack you every single time, and is one of the best teachers in life.
most patient teachers as well.
Patient teachers, wow. So those of you that come up to me at Sonali and also Andrew say, well, how do you make a stop loss work for you? And also you take responsibility, right? If it doesn't work, it just doesn't work. You can't look at it,
argue with it.
You can't argue with it. Otherwise, Chris and I would be in the Bahamas. He'd be on the cigar, I'd be on the mojito, and then we won't have to work, and we'll be here every day. But the key here, guys, is positive skew. How do you skew this positively so that it goes from a 50-50 to like a 53, right? Or a 57. How do you get that positive skew? Emma got this, so I have full confidence you can get this too. So whack my screen up, because this is something I taught her on a demo. And I said to her, Emma, can you show me on the daily chart? This is New York Cocoa, right? First time she's looked at this. And I said, can you tell me where it bounces off that green line? And she then says, yes, I can tell you that she pointed over there, you know, and I said, how many times has it bounced off this green line? And she said, okay, 1, maybe 2, 3, 4. Now, for technicians, the more times it bounces off, the more it confirms it. You can see it trying here again. And then I thought, oh, breakthrough, but actually it bounced again. That just tells me that there are a lot of buyers, right?
Yeah.
At this point, there are a lot of buyers. So I'm not going to be putting my stop loss. We went long on this, as you can see. I'm not going to put my stop loss right there because, you know, I don't want to be hit by any algos or any houses if they've got theirs there. I'm going to just put it slightly higher than that at 6,552. By the way, trader friends, those of you that ask me what's a good color for people with astigmatism like I have, it is yellow or white, okay? If you want to draw those lines, yellow or white. And so very easily, that's how she learned. You know, you're not going to want to put it down at, you know, 4,000 or 6,000. You want an efficient stop loss, right? And so she very fast, very quickly learned to look at price action, learned how to put a stop loss. Then Sonali asked me yesterday, and Tiffany said, Ange, what do you mean when you say you walk up your stop? So in the case of New York Cocoa, if my trade, I'm going long on this, goes up to, let's say, 82, you can walk up your stop physically. It's free, totally free on the IG platform. And you just bring your 6,552 up as much as it has gone up. So it effectively follows follows the price action, right? You can also put a trading stop. Chris?
Yes, you can use a trading stop instead, rather than just a normal stop where you just say, if it goes to here, close me out. You can specify, you can change that from the platform. You can change it from, on the deal ticket, from normal, I hate the word normal, but there we go, normal to guaranteed, to trading stop rather. You will then be able to say, I'd like to be a certain number of points away, but I'd also like to say if it moves up, say 10 points, 20 points, I'd like the trading stop, the trading step to move up as well. And it will follow, or down, of course, if you're shorting, it will follow your movement. So you can lock in some of that profit as it goes. The key thing with a stop is, I always say trading is like a hypothesis. It's if it goes down to this level, my hypothesis doesn't work anymore.
Yeah.
I think this is the key. This is what you're seeing with cocoa. If it were to go below those levels that have been important before, which is all technical analysis tells you, then it clearly wants to go down further. Really, it prevents you being stuck in that trade. For example, if you say, I'll just use a mental stop and if it gets down, I'll close out. No, you won't. The beauty of the stop is it will do it for you. Takes that decision or likely lack of decision away from you and does it for you.
Totally. And I love stops because, like, Sonali is asking me, why do you stop, right? Why do you stop trading it for well, you guys saw the reason. Emma, I have to get her to swimming. I have to get her back from school or something. Some of you might have to, you might have elderly relatives that needs, stop loss on gold. Let me just finish this up for Tiffany for a sec, because Tiffany then also asked me a question as to when I decided to come out and when did you take off cocoa? Well, basically, you see the blue line there. I was trying to explain to Emma with scalping, and I said, look, we are at 8176. I'm trying to zoom in for you, 8176. And we noticed that on the 10-minute chart, it wasn't breaking through that with conviction. And if that doesn't break through with conviction, that tells me the next high is not going to be reached. So we cleanly took that off, waited for re-entry, right? Trader friends, you wait for re-entry because there's no point sitting on something. So we're going to come back to me now whilst I get my gold chart up. Gold, any thoughts on gold, Chris?
Well, yes, it's really popular, really strong trend over the year. It's one of the best performers of the year so far, really, and it's taken a horrendous knock, as you should expect in all trends. Even the strongest uptrend takes nasty pullbacks, and that's exactly what you've had from 2800 in gold back down to 2560 so far. Is it trying to bottom out? Ask me in 3 months' time, and I'll tell you, but maybe, and that's what the price action starts to look like. I think that's the key thing here, really. You've had a pullback in the trend. The overall trend is still there. Yes, it's broken through trend lines, as Anne just drawn, but as they used to say, never trust a trend line, because it's just a question of drawing it slightly differently. Never trust diagonal lines.
Exactly.
One to watch.
And the more you practice with the lines, the better you will get. And also remember, I find this very useful, because there's also a time to pivot, right? And for example, for gold, Monkey Man asked the question about, can you show us a stop loss on gold? Gold, I became a bear once Trump won. And so I decided that actually it's the thesis I had in my mind has changed, and actually we're dealing with a different landscape now for gold. I've got 3 lines there for you, Monkey Man. If you want to whack up my chart, guys, what you're seeing is that it scaled those highs around October. And then we saw Trump win. I became a bear because it fell through the 2650. Monkey Man Rich can tell you, if you meet him, that he now feels uncomfortable if I don't text him with my goal predictions at about 4 o'clock that time of day, because I get very excited when it breaks through with conviction. It then broke through 2,600, which is my second yellow line there, which tells me that the downward momentum is still in play. So in terms of where I'm looking at now, that 2530 level, which incidentally is also the level that our flow desk is looking at. We spoke to Elliot earlier this week. That's drawn from a fib, but also if you look at it, you can see that there was point of resistance there. Hard to have multiple bumps of resistance in a gold chart that really has, you know, had a really strong run and you know, hit record highs.
Incredible run. But definitely one to watch that previous resistance, now potentially support. But again, markets, they go through these periods. It has to stop going down before it starts going up again, if you like. And it's not clear yet that gold has stopped going down. Yes, it rallied off the lows yesterday. It's the kind of thing, if I'd like to buy gold, you say all the way through September, October, and then it gives you this pullback and you think, oh, I don't want to buy it now because it's gone down a lot. But you've got to be aware that it might yet recover, and the price action might point you in that direction. And that's, of course, all trading is. It's saying this might happen, and therefore this is how I'll trade it, and this is where my stop goes. If it doesn't happen, I'll get stopped out to this amount, this percentage amount of my trading capital, and no more than that.
Yeah, totally. And Monkey Man, if it bounces off that 2530 level and keeps bouncing off that level, to me, that, yep, it's that blue line there. As you can see, the yellow lines are easier to see, the blue line there. But if it bounces off that level 2530 repeatedly, that to me is a signal that the trend may be changing. So like Chris said, you have to have these key entry and exit points in mind. Don't go into a blind trade.
No, don't just jump into it. Think about what the plan is, but also think about where your stop should go, and you define your position size from that.
It's like getting on and off a bus, isn't it? You don't stay on a bus forever.
What's a bus?
Well, it's, you know, private jet, obviously. No less for
My favourite is Lord Curzon, who once got on a bus and asked him to take him to his house and got very cross when the bus wouldn't take him straight to his house.
Did you know as well that I was surprised to see, like, was it 170,000 private jet flights out of the UK?
Is it mad?
I thought it was a big number, but I didn't think it was that big. And the UK is the top sort of hub for
it's huge.
jets.
It's huge, really.
Yeah, I'd love to know the breakout. Mostly Middle Eastern, you think?
And of course, you know what Warren Buffett called his private jet? The indefensible. Because he knew it was too expensive to afford, really.
Do you know what the Sultan of Brunei called his two tenders? I'm not going to say that on air. On that note,
ask the question. Ask her and she'll tell you on air.
What is the risk-reward ratio, and why is it important?
The risk-reward ratio is saying for every pound or point I'm prepared to risk, i.e. lose, I want to make two, ideally 2, 3, or a lot more than that. So gold is a classic example here. If we're trading it down here, and we're saying, for the sake of argument, we bought gold here, we'd say we put our stop down at 25.30, just put it there, so 35 away. We'd be looking to make at least, say, 70 as a result, so 2 to 1 risk to reward. And the reason why it's important is because so many clients get this the wrong way around, and they have more winning trades than losing trades, but the losses on every trade that they lose are bigger, far bigger than their winning trades. So they're risking, say, 10 points to make 1 point. And ideally, you want to be risking 1 point to make 5 and do it that way round. So remember that if you're using a limit as well, which is the companion to the stop, and saying if it gets to a certain level, I'd like you to close it out and then I've made a profit. You're looking to say, put it 10 points away to make 20. Whereas a lot of people do it the other way around. They'll have it 20 points away to make 10, or they'll not have a stop at all and they'll let it go deeper and deeper into red. The moment it moves into profit, they'll close it out. And they've risked, say, 30 to make 5, which is completely the wrong way around, because you'd have to win 100% of your trades to make money that way.
I'm going to put that on, actually, whilst you're speaking. Convince me.
Yeah, so it's a possibility.
Also, I've just put that on people with a risk-reward ratio of 1 to 2. As a minimum, I kind of think. Axel made a good point, right? Like you have to think about charges and everything as well. Yeah. So my minimum is 1 to 2 risk-reward ratio. However, you can go higher.
I think you should ideally go for higher, because then of every, say, 10 trades you have, you only need to win on 3 or 4. Really, or even 2 or 3, if you've got a sensible, say, 6 to 1 risk to reward. You're looking, for example, in gold, if you think the trend is going to revive, you think it will therefore go higher than 2800 over the course of time, then you've got a very good risk reward ratio down to 2530, because you think it will go 2800 and even higher than that. And that will then compensate for the fact that you will have to take a number of losing trades in a row, and it is immensely frustrating.
Now, let's get the next question up, people. What is a stochastic oscillator and how does it work?
This one is kind of for me because it's one of the ones I use when I'm trading. If you get up, well, I'm talking, if you get it up on your chart, you can get it, find it on the platform. Stochastic oscillator
Which
manages...
instrument do you want? Any particular?
Any, doesn't matter, just an index preferably. Sort of measures the rate of change. It gives you overbought and oversold. You get rid of those Bollinger. I can't stand Bollinger Bands. Too much clarity. So you're looking at the sort of rate of change of a price. It helps to identify, or it can identify, turning points in the market. So if you go for Tesla, for example, then you go to the indicators on your platform up there, and you go down, next one along, the bar chart, doing this live.
Yeah.
There we go. Keep going down to the bottom, stochastic, and you get it there, and that's how you set it up on your chart. Now, I prefer to smooth it out with the, sort of to change, to fiddle with the parameters, but essentially you're looking for those. When it gets down into, as they say, oversold territory, it might start to signal if you get a bullish crossover from the low, that's where you might get a turn in the price higher. What it's doing is confirming what you're kind of seeing in the price anyway. And that's what all good indicators should do. It can't predict what will happen next, but it might confirm what we're seeing anyway. So you can see how it gives you a dip to buy into. It helps you to place your stops as well, really. I tend to smooth mine out to say 14.53 rather than 5.33, so I get fewer entries.
So talk us through this. How do you
I've changed mine. If you change the top one to 14, to 5, and then leave.
Do that?
Yep, and then just apply.
And talk us through why you've done this.
Well, because it smooths out the number. If you use the default, you get a lot of readings, and therefore you'd be taking a lot of trades based on that. But here we're saying we want to smooth out and incorporate a greater amount of data. So there's fewer entries, but ideally they might be more long-term signals rather than trying to catch one every couple of days. You're getting one. And again, here it's very, very slow. So you're not getting that many over the course of time.
This is really interesting. I've not used this before. And tell me what this indicates. It's now touching 80.
Yeah, so people say, oh, that looks overbought and therefore can't go higher. They're not necessarily signs. For example, I would also use the same conjunction with moving average or simply eyeballing the trend, saying, is it in an uptrend, therefore you're buying dips? Is it a downtrend, then you're selling rallies? But in an uptrend, if you're buying dips, you're looking for those stochastic readings at a low level, i.e. below 20. But when it gets to 80, it's not necessarily a signal to exit because it might be a continuation. But you're looking for those higher readings, suggests that maybe in the short term, the momentum has exhausted itself. But as you can see, actually, if you go back to, if you look at that on December from last year, you had, we've zoomed right out there. So I can't think. Go back to December 2023, and you can see how you get a fairly high reading. And then it drops back again. Just go back further into December for me.
Need a mouse.
Yes, and then it does continue to go higher before it drops. So you're not using it to signal exits. For me, I'm using it more to signal entry points.
Right, gotcha.
But I think it's all the key with indicators. They're not here to tell you what will happen next.
No,
they're there to sort of give you assistance in what you can already see.
Like a marker on a trail. If you're looking for guidance how to get to the pub quicker. Yeah. And you're looking for a handy little wooden sign that someone's put up for you. So it's a friend, really, isn't it?
It's a friend in your trading. Yes, you put it that way. Don't use too many of them, whatever you do.
Yeah, because we make that mistake, don't we? Like when we first learn about technicals.
Yeah, you start out with one indicator, and then you add another one in, and before you can't even see what the price is doing.
Yeah, and I like just understanding the behavior behind price action. Also, don't forget, on the IG platform, you can also look on the tasty side of things, the option side of things, and take a look at implied volatility. Also look at IV rank if you're trading something for the first time. And I really like the implied expected move because that gives me an idea of where to
sense of where things are going. Yeah,
because you don't want to you don't want to go and by how much. It doesn't tell you whether it's up or down. No. There's no guarantee, people. There's no free lunch. You hesitated.
Sometimes at IG there's a free lunch. We've been really good.
I've paid for blood with mine.
Oh, well, you see.
Is that why you don't show up for the free lunch? Shh.
If you're using the platform when you want to get a sense of volatility, you can use average true range, which is another one that gives you. You can see that on the Spreadbet CFD platform, get a sense of how volatile that market is.
Okay, we have one more minute, Chris. I'll be honest with you, because I was at the event late last night. I have not had a chance to look at this question. Shall we just go for it? Let's go for it. Can I use trading volume to predict price action trend? I am going to. he's about to explode.
No, I think it's a really good question.
I am going to say not for direction, because how many times have we been there? I don't know about you. I've been like whacked several times where I think volume's peaking. I know exactly how this is going to go, but the markets are random.
I think it can be, sometimes it's a useful guide, so particularly in shares, if you've seen a wave of buying into results, that can be quite interesting. It doesn't necessarily mean the share price will keep rallying, but it might indicate some short-term strength. The one that always gets me, as someone that has been saying that equity markets mostly go higher, is people always complain, oh, this uptrend isn't very strong because you can see volume declining. And what that actually means is people are less active in uptrends. They buy the market and then they sit on it. You will see volume rise in sell-offs and continue that way, but you often get a surge, as you can see there perfectly nicely, and even on these short-term charts, the volume surges and then it keeps moving higher. But even if the volume continues to come off, oh, it's a lack of conviction buying. No, it's people have already bought and they're sitting on it. You see volume rise into sell-offs, particularly in the same way that you see volatility rise into sell-offs.
And what I like about volume, I tend to keep it up if, let's say, it's a very busy earnings season.
Yeah.
You might have surprises, coming out after the bell. Also have volume up when you're trading something like jobs data.
Yeah.
Or anything that is, going to be fast moving. But also, as Chris rightly said, volume to me often indicates everyone's coming in to sell. Right? So you also need to make sure that you are not last out the exit.
Yeah.
Let's have a look. We'll whack volume up here. This is the DAX 10-minute chart, people. Because we got a lot of DAX traders here who are listening in. And we have seen, can you take a look at that volume at the bottom? We have seen, you'll see it peak going into the rise, but also, as Chris rightly said, as we sell off and we start going lower as well. And so, this is one that I keep in mind if I am scalping, for example, and if you are a momentum trader, it's one good to keep up as well. When would you say volume's not helpful? Is there ever a period?
I wouldn't say it's unhelpful at any time, really, but it's not an absolute predictor of what comes next, really. Again, it's like all these things with trading, it's quite a personal thing. If it works for you, then use it. And if you don't find it useful, don't feel like you're missing out if you don't use it. Really, I think it's a question of what's your favorite time frame, what's your favorite indicator. The same with stochastics. People say, oh, what's the best setting for that? What's the best setting for moving averages or RSI? There isn't a best setting. There's one that maybe works better for you than it does for somebody else.
On that note, I'm going to wrap it up, but I'm actually making that sad face because, Chris, you're leaving.
I get to escape.
You get to...
I have one request.
Yes.
For next time.
Yeah.
Can you sort this chair out because I keep sinking?
The sinking feeling.
I have a terrible sinking feeling, which I get most of the time.
Wasn't that a wonderful advert? Sometimes is it 19? Help me out, trader friends. 1950s or something? 1960s. Oh, Asians.
Before my time.
Asians age well. What can I say? No, but there's this. It was a cigarette advert.
Oh well. What are they?
But I'm just saying that I seem to recall this. My dad was in advertising, big ad guy. And I seem to recall this advert, and there's this guy taking a cigarette break in a camera sort of capsule. You know, the ones that you find for passport photos here in the UK, in like a Sainsbury's in the corner. And he's trying to take a photo, and he's having a cigarette break so no one can see him. And he keeps winding lower. Do you remember that ad?
No.
So weird.
To search for it now.
Yeah, how do you search for it? Right, on that note, thank you so much for watching us on Confirm and Send. Hope it's been helpful. If it has, please put those comments to the left. Any other questions, please put them at ask@ig.com right below Chris's face there. We will get...
Wherever that is, I can't point to it because I'm missing.
Yeah, right there.
Oh, look, I'm quite good at this.
Yeah,
I should do this more often.
And so we will answer those questions. It will go into a queue, so even if it's not the next one, it will be asked.
Rise and shine with IG's new morning show, Trade Live with IG,
covering all our UK product offerings, including our OTC and exciting new US listed products.
Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the Close button next to the relevant trade.
Hey, welcome back. I am just replying to Mark Carberry. You are the man. Is it Hamlet? Was it Hamlet in a passport booth? We need to look for this. We need to look for this because this has been driving me crazy. Because the chair that Rich sits in, I think we've had so many people coming through to try and, like, you know, come on the show whilst Rich is on the road, that they might have kind of broken it because it keeps winding lower. So every time I look at Chris just now, he was kind of like slightly sinking by a centimeter each time. But let's look up this Hamlet passport booth advert, which has been driving me crazy because I remember this and I don't, here it is. Can we show this, guys? I don't even know when this was. I'm gonna try big screen, but I certainly remember it, and it was when cigarettes were still okay to be advertised. And can you see this? I don't know whether you can get volume, but he is trying to take a passport photo, and he then takes out this cigar or something. What is it, Ma? What is it? Is it a cigar? Oh, you just said mild cigar. And he tries to take this photo over and over again, and each time he doesn't, he's quite cringeworthy there, each time he doesn't kind of make it, or he doesn't like the photo, or it takes the wrong photo, and then his comb over doesn't work, it's quite funny. He gets exceedingly stressed out as, there you go, as he goes along. And then at the very end, as you see his head, he emerges. Oh, thank you, Mark. This makes my Friday. Thank you so much for that. Oh my goodness, I'm crying from laughter. But that was back in the day when it was still kind of okay, and well, it's not okay anymore, to advertise cigarettes and everything. And my dad worked in advertising, big ad man, in a time when not only could you advertise cigarettes, remember those days, but you could also hold 2 big cigarette accounts and have the same client on one book. So he had Peter Stuyvesant and he had Philip Morris, and they brought all the cool concerts to Asia. So I have been to tons of these concerts. But having a look at British American tobacco for you, because we are here talking about trade expectations. So looking at British American tobacco, and we have seen these companies, I mean, we talked about dividend yielding stocks, and these are dividend yielding stocks. But as you can see here, it has had a big shakeout, showing you the daily chart here. Obviously, as all those big names try to wrestle with the change in trend and obviously legislation as well, that is negative, tobacco negative. They have been trying to launch all sorts of different products like vapes and what they call non-tobacco products. But that too now is starting to come up with legislation. So what I would say is, when you look at these stocks, also try and balance that out with what is incoming. Never trade what is now, people. Always trade what is incoming. You hear Rich talk about fundamentals all the time, and I hear you asking me, hey, and why is it if the outlook is not looking great for tobacco companies, why is it then people still buy the stock? Why is it well supported? Well, its market cap, 62 billion. Normalized PE ratio, just if you whack up my screen here, 7.4, not bad. Dividend yield, this is why, people. The dividend yield, 8.4%. So for many of these companies, it's still, despite the weakness in the share price, it is still supported because of this dividend yield. Chris B saying, messaging right now from outside saying, you said it was cigarettes. I knew it was Hamlet. And so as he was sinking next to me, Mark, I had that, there's this strange music as well. I seem to recall this music. If anyone can tell me what year that ad was in, that would be great, because for some reason, I was actually born in the UK. I'm wondering whether it's a childhood memory or something like that. Someone's kindly said, but aren't you too young for that? And I just said, well, I don't know. You don't know how old I am. So looking back at this as well, it's important to take a look at the mood music. And for me, if you're trading this in terms of spread bet, and you're not looking at, dividends and stuff like that, then I would say, these for me are, I would be bearish in the short term, because a lot still has to shake out. We have incoming potential legislation to do with the non-tobacco products as well, with vapes. You saw with, I believe it was Rachel Reeves recently, talking about, I'm going to search this up, she did something with vapes. I think it's the single use, vaping tax and tobacco duty rises, and we did see, I believe, that vapors in a Halloween budget, there was a new vaping tax and an increase in the tobacco duty. So vapes will be banned across the UK within 8 months. And take a look at that. It always amazes me, people, how, well, I guess you're going to tell me that it's to do with sort of what you prioritize. But have a look at this chart and tell me, if you are still willing to pay this amount for a packet of 20s. I mean, take a look at that chart. That's a lot. I mean, the number of times if I got £1, every single time I was tapped and I was told, hey, Ange, you know, when you're coming back from that business trip, can you just, you know, you're going to Asia or you're going someplace where it's cheaper, can you just grab, you know, duty free, bring the maximum limit in, I'll give you, and it's like the price of 1 pack here. If you're going to Malaysia, Singapore, and you buy 10 pack there is the equivalent of 1 pack here. It's incredible. And so I would say that, you know, we know the mood music with legislation. Keep an eye on that. You know, don't avoid that. If you're holding this, though, in your longer term pension because of for the dividend yield, then that's a different matter altogether. Difference between trading and investing. Which brings me to a question by one of our viewers recently. And I believe he also gave a name. This is why I say, please, please send in all your questions to ask@ig.com. Also, many of you last night said to me, hey, and where can we, who can we speak to get into the IG office for the visit? Well, if you send me your details through the ask@ig.com, I'll see it and give me your details. I will put it forward to Sam Owen, who heads up the PCM desk. They're the guys, they're the people, and Sarah as well, who sort out the visits. So I will also, yeah, well, I don't quite know how it works, but I will put it in front of someone, I promise you. M. Chesterton, there you go. M. Chesterton, would love your first name. You've touched something quite close to my heart because, as you know, I am no stranger to muck. I get property. I have flipped 3 on my 4th. He says, hey, Ange, what are your thoughts on the plastics industry? You spoke about copper in the building industry, but what about plastic, which is increasing in use in plumbing, underfloor heating, fascias? What are the stocks and ETFs for this? Right. I have prepared this for you, Chesterton. I'm not going to even try and guess the M. I'm going to call you Chesterton. You can call me Ong if you like. You are absolutely right that there is an increase in plastic use. Here I have a push fit. I've got another push fit here. And you are right that in the building industry, we're seeing, and also, you know, residential too, increasingly high usage of these plastic materials. And there are a few reasons for this. I also have some copper pipe here. I have quite a lot under my basement. And so it's really easy for me to get. But this is still widely used and will be strongly supported. I'll tell you for why in a second. But for those of you, this is Yorkshire fitting, and this I think is a free flow. But back to the plastic. This is increasingly being used, trader friends, because, you know, it's durable, it's easy to get hold of, right? Not hard to buy. Plus also, if you have to use copper to fit this, it takes an age, right? Compared to one of these plastic push fits. This, as the tin suggests on the tin, you just basically push the pipe into this fitting. Whereas this, you need to then clean the pipe. You have to put some flux in, which I like the smell of. But before that, you also have to put in wire wool to clean it before you push the pipe in. You have to then have a copper pipe bender. You have to have a copper pipe cutter. I have 3, by the way, because I killed the first 2. There is a hack to that as well. And then just when you think it can't get any worse, you have to bring out the blowtorch and then you have to solder it on. It is a pig to get this off. It is not a pig to undo a pipe that you've put onto this. What I would say though, Chesterton, is that this although it's increasingly being used, is that you're seeing a hybrid. So you're seeing copper in terms of a long pipe going into these push fits, because unlike copper, you can just take it off and put it back on again because it has a seal in there. Therefore, copper prices are still well supported. However, plastics are durable and the technology is improving. And so we're seeing an uptake in this. And so if you wanted some exposure to plastics, look up the ETFs. I don't really dabble with plastics, I'm going to be honest with you, just because I think that copper is so well supported, and I truly believe that there is still a lot of building to be done in places like emerging markets, and they tend to use copper, so this will be well supported. The other reason why I tend not to dabble into plastics in this space is because I prefer to dabble in stuff that's used in potentially space type and airlines. So they're very closely correlated. I can talk to you about that another point, because you're telling me that I might run out of time. But there are a lot of companies out there that make specialist fixes that are really, really interesting. Monkey Man knows some of them actually, which is also very fascinating. But I'm about to go to break. I'll leave you with one last thing. Copper and plastic. Chesterton Plastic has got a great design life now of 25 years. However, plastic's not easily recyclable, at least not yet. Copper is very easily recyclable, and that's why if you leave it out on your drive, you've done plumbing work, where I live, it gets scooped up immediately. If anyone sees this gleaming, even though it's dirty, you can sell it. And also the other wonderful thing is this has a design life of 50 to 70 years. There you go. And that is your trade expectations, answering Chesterton and also some of your questions about the tobacco industry.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Trading the news is an essential skill for all traders. Major news announcements can often cause large price movements, particularly in Forex markets. So, here are 5 key pointers to help you try and make the most of those moves. 1. Do your research. Know the times and dates of important events. Use an economic calendar, for example, the one on IG.com. It's a vital tool to help you plan ahead. There are many announcements on any given day, and it's essential you know which will affect the assets you're trading. For a Forex trader, generally any event impacting the US dollar is important. Events like non-farm payrolls, Federal Reserve minutes, and GDP. If trading shares, look out for company earnings, dividend payments, and stock splits. 2. Check what the market expectations are for the event. Look at a chart of what happened last time. How did the market react? Was the data better or worse than expected? Did earnings beat or miss estimates? Use what happened in the past to inform your future trades. 3. study related news and events. What else could impact the market in the wake of the announcement? Take crude oil as an example. US inventories are due on Wednesday. If there's an oversupply, the price should drop. But say OPEC ministers are meeting Thursday. If they reduce output, the price could rise. So, it's essential to look at the overall picture and not take each event in isolation. 4. Put a strategy in place. Know what levels you want to buy or sell at and where to put your stop losses. This will help you to have the courage of your convictions and avoid knee-jerk reactions. And finally, 5. Learn when to fade the news. Here's an example. The CEO of Company X announces he's leaving. The stock falls, but you believe the company's fundamentals are still sound and the market is overreacting. So you hold your position. If you're right and the price rises, you could profit. Of course, if you're wrong and the price continues to drop, you'd make a loss. Remember, these are all just guidelines. While trading the news can be exciting, it is also risky. Unexpected results can lead to high volatility in the market. So, make sure you're well prepared, and always have a solid trading plan.
Hey, welcome back. Welcome back. We are with the one and only Luke Moore, who was at that cool event last night with Tasty and Tom Sosnoff and the gang, Rich, of course, in fine form as well. Luke, just talk us through the night. It was so good to see you.
It was a good night, wasn't it? We had about 200 people. It was incredible. It was really, really busy. So that's the 4th stop on Tom's tour. So I think we've sent a bleary-eyed Rich, Tom and Britt, who was helping with the event, off to Dublin this morning. Yeah, it was brilliant. It was brilliant. There were so many people that came up to us and said hello. There were so many people that, you know, comment on this show and have seen us. I think the thing I'm finding quite strange is, you know, I'm new to this world. I'm new to the platform you guys have given me. So the amount of people that have come up and said, I recognize you, I know who you are. And I'm like, oh, hey, how are you getting on? So it's, look, it's brilliant to try and meet people. I think what works with this show is it's a sense of community.
Yeah.
And that's really, really coming through. So thank you for everybody that came. Thank you for everybody that said hello. It was really good to see you.
Thank you, Tiffany. Thank you, Matt. Thank you, Sonali. And thank you to Adam DeLuz, who's also just messaged in as well. Andrew Duck, so nice to see you. Loving the guy that came up to me and said, I'm not Monkey Man, don't worry. That's great. Just showing you some pictures from Luke. He's just passed them on to me because I was very busy, so I wasn't able to actually take lots of photos. But there you have it. They put through some, was it 35 trades last night, Luke?
Yeah, it was a weekly high. So I got through with the guys on Monday up in Edinburgh. We got through about 25, but I think we gave Rich. You know, Rich has got his little laptop up there and we're all trying to follow Tom on the screen, and Tom can just whistle through these trades pretty quickly. You know, we've got an iron condor, we've got a put spread, we've got a call spread, we've got all these different things going on at the same time. So Rich, we gave him a bit of grace on the first night, 25 trades up in Edinburgh. I've heard that we had about 30, no, I think we had 26 on Tuesday. I think the numbers were getting better, but last night, 35. Yeah, so we had a weekly high. Let's see if they can beat that in Dublin this evening. But yeah, it was a brilliant event. So look, thank you again for everybody to come. Loads of really cool questions as well. Like, it's amazing how engaged everybody is with the markets, with the stuff that we're trying to help and work with them on. So yeah, long may it continue. You know, let's try and I think the good thing is all of the top brass at IG were there tonight. So sorry, last night. So hopefully they see how good an event it was and we can do more of them. So that was the best thing about it.
Not just top brass, but our wonderful trader friends as well. Just whack up this photo of Sonali and Saxena and Barbie as well. I mean, Saxena, we've been talking to you for ages. It's so nice to be able to put a face to a name, and Sanani as well, who's watching live and trading live with us today. It was so good to see all of you. But what was also what I found really cool about last night, Luke, I don't know whether you agree as well, but we really got a sense, and never mind, you know, you don't worry, people, you're normal if you didn't get it all, if that was your first time, because I'm still learning and I'm still, you know, processing this. I'm very new, like Luke, to the options space. But over time, as you use the platform, you start understanding, hey, that's where the expected move box is. And hey, that's where the IV rank box is, right? And so it's just about keeping an eye on those few markers that actually makes it very easy to use. Like the yellow line is, you know, where we are with the price action at the moment, and understanding those things rather than kind of going, whoa, what is all this, you know, noise and color?
Yeah, I think what I found, you know, having been worked in with options across my career, I've been with IG for 11 years, but it's specifically recently as we've got to kind of see more, right? Our platform has never had the deltas, it's never had the Greeks. We do a lot in the way of IV on the spread bet and CFD business, but when it comes into that kind of under the hood analysis of options, this is fairly new to us. So what I took from last night, and if I can pass on any message, it was the delta. And I think a lot of this data can sound quite intimidating if you don't break it down. The delta is what happens to the price of an option with a 1 unit change in the underlying. So it's a sensitivity measure. But as Tom rightly said, it's also the rough mathematical probability of an option settling in the money. Now, for those that were there, Tom was explaining that he quite likes to be a contrarian with a high probability of profit. So if you know that there's a 20 delta option, you're looking at that a potentially 80% chance this settles it out of the money. Now, if that settles out of the money, as a seller, that's what you want. And so the whole kind of framework of how you think about these things, we always think that people would buy them as a kind of as a fixed risk trade, but actually that selling side and using combinations of options to put the find risk on is where it's really interesting. So that was what I took from last night.
Stevie C messaging right now saying it was great to meet you, Luke, yesterday. Venue was great too. Quaint, he said, Tom is a great presenter with an amazing memory for trades. Not so much for eyes, though, color of eyes.
Yeah, not so much his wife's eyes or his children's birthdays. So he said.
Memory. I remember you telling me you want to talk about the S&P.
Yeah, so look, the S&P sold off yesterday. And I know that because I've just been absolutely run over on some short puts that I had on. I had a strangle on for the week. My short call got limited out, which is fantastic. I took profit on that, but my short put got run over because I was at the event last night, didn't have a chance to see it. So that's a bit of a shame for me, but I'll be managing that one on for the rest of today. Hopefully it comes back into my favor. I have had messages overnight saying, is this the sell-off? And I think that it's a sign of the market that's had a good run up. You know, we've had a really strong move post-election. Buyers are trying to find what the next catalyst is. And Jerome Powell came out last night and slightly hampered the expectations for rate cuts. Said, look, we're going to try and take it slowly. We all think and understand that the Trump trade is probably going to be quite inflationary. So I think he's just trying to slow things down a little bit. So that's just taking a little bit of the heat out of these equity markets. But I looked at, so this is where we can start to put this into practice. So when you look at options, you can get what the expected move is going to be by a specific time on a mathematical basis. So if you look at the S&P futures and you look at the weekly options that expire next Friday, they are currently pricing in a potential 80-point move. So if that's an 80-point move, that puts us down to 58.40 potentially on the downside. So is this the sell-off? It could be. Is it going to take a couple of percentage points out of the market? It mathematically could do. But is it going to be, the straw that breaks the camel's back? I think the chances of that are probably less likely. But saying that, no, we're back at what I had as the level of support for the week, around 58.20, 58.18. That was from Monty's market report that you can access from our website, and this was the first level of support that we should look at for the S&P this week. So we're at a bit of a key level. Let's see what happens. If I'm kind of giving you the view live from the trade desk, live from my kitchen, we've seen buyers this morning. So roughly 2/3 of the trades we've seen in the last couple of hours on the S&P have been buys, which is, taking opportunity to kind of buy the dip. But what we've seen is that our clients are still net short. So at the moment, 58% of our clients are net short the S&P. So, a happy end to their week, not so much a happy end to my short puts at the moment, but we'll see how that carries on.
Also, with the S&P 500, here you go. That's the client sentiment that Luke was talking about earlier. This, just a reminder, trader friends, this is a snapshot of the IG client universe. And if you wanted to look for further signals, then normally, I would say look out, for analyst comment and from different broker houses. But if you wanted a snapshot of what's happening in the IG client universe, this is a good one to look at. It also has last hour 52% sells on the US 500, which is the S&P 500, and it also gives you this week 51% buy. So it gives you relative momentum as to where the mood is going. Do you think there might be, further potential uplift as well if we do see, pro-growth taxes? Let's talk about this SEC reform right now, Luke.
Yeah, perhaps. I mean, I saw an interesting comparison that over this side of the pond, we call it governmental austerity. Over there, they're calling it Doge. So we'll see how that starts to filter through. I think when it comes to these markets, I think the key trade post-Trump, outside of Bitcoin and outside of Tesla, outside of the names that we've all kind of spoken about, is this dollar. We've seen such incredible strength on it, and that's not discontinuing. We're seeing slightly less strength this morning, but cable's getting absolutely hosed. I mean, where are we now? We're down at 126.70. Dollar yen is back at highs, 155.64. So we are seeing this dollar strength really start to play into dollar yen's pulled back a little bit. Yeah, okay, that's interesting. But there you go. So it's bouncing back again off. So overnight we've seen a bit of a move that's starting to reverse course a little bit. So okay, maybe that's one to keep an eye on. But either way, if the dollar is continuing to put pressure on the rest of the world, that's just going to have its own growth impacts, and it's going to continue to see how that plays out. So let's keep an eye on that. Did you see the GDP figures out this morning? The UK GDP figures?
I saw it
did you and Chris talk about it?
in passing, and I believe I'm right in saying that GDP figure. We also had some from Japan, didn't we? But the one you're talking about is the UK rising 0.1%. Is that right?
Yeah, so that's right. So GDP came out this morning at 7 a.m., just as we all were logging in for the day. We grew 0.1% last quarter. The market was looking for 0.2, so actually it's disappointing. Most
didn't feel like 0.1% growth in the Ong household. Let me just put it that way.
It doesn't. I like what your T-shirt says, by the way.
Oh,
what does your T-shirt say?
Thank you. It says, this is funnily enough.
Never bet against the Ong.
And then the small print.
This is
actually Trump related, this T-shirt. It was made for me by the editors of the desk at Reuters, because every single time they made a Trump bet with me, they lost. And I kept telling them, I'm telling you the hack, guys. I think none of you are listening. I'm telling you the hack. And they got so fed up after handing me wads of cash that they made me this T-shirt, which is great. So the first time Trump won, and you've heard me say this quite a few times, I'm not in there in the bookmakers to put any money down, because quite frankly, I'm busy enough as it is. But the mood music, if you have a moment, we've lost Luke for a bit, but we'll bring him back. If you have a moment when it's really wafer thin and no one can call it, right? So like the Brexit referendum, the last Trump election, the Theresa May hung Parliament situation just before that. If no one can call it, go down to the bookmakers and listen to the mood music on the floor itself. Take a look at what the odds are, because more often than not, they are right. And so the last time that happened, I said Trump was going to win, and so there was a lot of sighing on the Reuters floor. But also when Trump had COVID, I believe, if my memory serves me right, and we had a bet on that. So I took the side that Trump would be back in the White House the next day. All the other editors said, no, Ange, you're just being over optimistic. You know, everyone's in lockdown and now he's got COVID. What you trade is also, you know, you try and trade what you know, right? And my mum's a medic, and every medic knows that the crash cart. Luke, I was just saying about the shirt that was made for me by the editors at Reuters, because we were making bets. It's to do with Trump. And the second time, which resulted in the shirt, was they made a bet with me, and Trump had COVID. Remember that?
And that was when he was trying to drink bleach, wasn't he?
It was telling people.
Drinking bleach?
Yeah, it's all about drinking bleach.
Yeah.
It's all right. And I think some crazy people did actually drink bleach.
I hope they didn't. I hope they didn't.
So the bet was, my side of the bet was like, no, he's going to be back in the next day. Everyone else bet that he was going to be off sick for, you know, because he had COVID and he had all, like, you know, America Great and stuff like that. And, you know, let's face it, it's not spring chicken, is he? Although he'd like to think so. But they bet that, you know, he'd be back in a day, in 2 days. And of course, he was back the next day. But I didn't, it wasn't kind of by chance. I took the bet because my mum's a medic. And if you are a medic worth your salts, and you remember what you learned in medical school, you'll know that crash carts were invented in the White House.
Okay.
And so he has a hospital below him. So if you've got COVID, the best place to be is at work for him, right?
Back at the White House.
Yeah.
Well, there you go. Well, you know, to bring it back to UK GDP, yeah, I'd say we were stalling. So if you break down that 0.1 growth figure, it's the services sector. So there was an 0.8% expansion in the construction sector and kind of the industrial side, but only a 0.1% growth in the services sector, which actually accounts for 80% of the economy over here. So I think that's why we are a little bit wary. Rachel Reeves has been out this morning, and she's saying that she's, you know, really disappointed. I'll tell you what's going to be interesting though. Did you see the headlines off of her Mansion House speech last night?
No, I didn't. Tell me about it. I was at the event and I crashed before going to the event because I have to be up so early. And then when I got back, I was trying to get Emma to bed.
Okay. Well, I think the most poignant part of her speech. Now, the Mansion House speech is where they speak to the City of London. So, you know, they'll set the government set their stall out as to this is how we're going to try and help the City of London, massive engine for growth in the country. And then she actually came out and she criticised all of the regulation that's been put in place post-financial crisis, saying that it's gone far too far and that she wants to set out a process to cut tons of red tape. So I think I'm going to keep an eye on banks, insurers. I'm going to keep an eye on the financial services businesses here in the UK. We haven't seen a huge move yet today. I think it's just because it's a speech. We haven't seen anything effective, but you know, we had a bit of a dip this morning in the banks. That seems to be bouncing. Haven't seen a huge move in the insurers, the legal and generals, the Phoenixes of this world, but it's definitely going to be a sector to keep an eye on. That's what I'm going to be doing. The other place that I'm watching and seeing some movement today is in the property sector. So land security, as you mentioned it at
Let
the
me bring up
at the
my
opening bell.
watch list for UK house builders and also related, so like related stocks. So the Kingfishers, you know, Travis Perkins, Crest Nicholson, of course, is a builder. Got Barrett on my list and Taylor Wimpey as well. Go on, Luke.
Well, we've got land securities that came out this morning. So land security is one of the biggest real estate investment trusts in the UK, primarily commercial property, I would say. and they've not been doing so well this year since kind of autumn kicked in. But they actually had a part of their trading update that I thought was quite interesting. So when you look at a fund like this, you have to look at what they're providing as a valuation for their net assets. So given how much of their property is in commercial, they've got less residential. The commercial property sector has not had a particularly great time at the moment. You just need to look around and see how many empty offices and warehouses there are. They've said the value of their net tangible assets was higher than the market was looking for. So that's interesting because it also slightly rhymes. I mean, it's completely kind of disconnected, but so overnight the Chinese data suggested that their home prices were actually dropping slower than expected. So I know the kind of the home building sector and the property sector in China has been a huge part. So if that's starting to slow down, the kind of decline, that's good. When we bounce over to here in the UK, if we've got the biggest property fund in the UK saying that their value of their commercial property is not as bad as everybody was expecting, are we going to start to see a bit of a bottoming out in that kind of commercial property, which then leads itself into refinancing loans and everything that comes back, and then that will feed also into banks and kind of their net interest income over the year. So there's a few things that kind of come out of that result report, which I'm kind of keeping an eye on this morning.
Cool. And those of you just joining now, GDP slipping by 0.1% in monthly terms during September. The services sector flatline. This is what Luke was talking about. Thanks very much, Adam Deleuze, coming to my rescue there. Monkey Man also asking, is there any more news from SEC? I think we covered that. Not at the moment. I haven't seen anything so far. Also, just loads of people saying hi from the event yesterday. Also, Luke, thankfully, it's now Friday. We've had a really busy week. We've had that CPI figure, that PPI figure as well. I have positions in Hermes, as you know, and also I watched with great interest that we had those China details come out, and really a meh reaction all round, which tells me that the negative China mood is still in play.
I saw that as well. So they had. It was a bit of a mixed bag of data. So I've already mentioned the home prices. They used home prices dropped slower, dropped slower than September. So that's probably positive. Their industrial output was rising less than the market was looking for. So in October, their industrial output rose 5.3%. The market was looking for 5.6. However, their retail sales, which is why I think your point around the luxury sector, maybe one to keep an eye on. So they're the reason why these luxury stocks have been selling off is because we assume and have seen that Chinese demand has been slowing. We've now got retail sales for October rising 4.8% on a year-on-year comparison, as opposed to 3.8%, which is what the market was looking for. They've said that this has been boosted by a week-long holiday and the annual Singles Day shopping festival, which kicked off on the 14th of October, which is 10 days earlier than last year. So I think perhaps the market is seeing this as just bringing that extra boost to retail sales forward by a couple of weeks. So it becomes an October figure as opposed to a November figure, which is why I think the market hasn't really reacted to it. But yeah, Hermes down a little bit, Kering down up a little bit, LVMH up a little bit. So it's a bit of a mixed bag in that space.
Yeah. And also interesting to kind of see that, that bazooka or extra bazooka that we were hoping from China hasn't sort of come to pass. I mean, like Tom Roberts was saying, and a load of the other PCMs as well. It's like, when you talk about stimulus, you want to hear things like, additional money pumped into banks or, into the markets. You don't really want to hear that they found hidden debt, hidden debt that surely should be known to the Chinese authorities. But a really interesting space there. What else are we hearing mood music-wise from our clients? Has it been busy or is it quietened down? Has everyone gone off and started the weekend?
It feels like a quieter start to the week, a quieter end to the week, rather. One thing to note, we are going to see the November series of options expire. If you've got anything, if you've got any November options on index plays, don't forget this is the first monthly series to expire post-election. So if we get some strange moves into those expiries, just keep an eye out for it. There might be a bit of volatility around the end of the day.
Yeah. Thanks very much, Luke. You doing anything nice at the weekend?
Well, I'm off to the rugby tomorrow. Yeah, so I'm going to
Nice.
go see England take on the mighty South Africa. And then it's my granddad's birthday on Sunday. So
Oh, amazing.
yeah, I'm going to be here, and then I'm going to be back in Kent on Sunday.
How old is your granddad?
Please don't ask me that because I don't know. I think he's
You doing a Tom
78,
Sosnoff?
79.
You doing a Tom Sosnoff where you're like, don't remember?
Oh, my wife's shouting at me. 84, apparently.
Amazing. 84. Happy birthday to your granddad from us. Have a good weekend. Thanks, Luke.
See you later. Thanks for having me. Bye-bye.
Hey, trader friends, welcome back. We are going to talk you through market measures, one of my favorite geek out moments here, because I really like something that's useful and helps me position in the market better, and I like that positive skew. Here's a chance for us to show you the maths and the thinking behind all of that. So today we're taking a look at the big four basic options contracts. Now, this is the big four basic options contracts. Before we get to it, let's take you a look into the basics first. We have to understand what they're made on, what the underlying is, and how they are priced. The big four refers to the four basic options contracts, short or long puts and calls. Some of you might have seen Tom Sosnoff and Rich hard at work last night putting these on. And he built this diverse portfolio before your very eyes, and it's just basically built on four basic options contracts, right? So all option strategies are based on these contracts and combining them to manage risk reward. So lots of people came up to me and said, oh, you know, it sounds really complicated. What is this iron condor? What is this jade lizard? What is this, you know, straddle and, you know, skewed butterfly, you know, dragonfly? What does it all mean? They're just a way of talking about the shape of the strategy, but they're really built on basic contracts. So as an example, there's the long call and the short call. And the call contract basically shows you in those circles there what it means when you're on the left side, the stock goes down. In the middle, where that blue bubble is, the stock stays the same. In the green, the stock goes up, meaning the buyer is in the money. Or like they say in Chicago, you're either up money or down money. When you have a long call, every time you heard Tom and Rich and they bought one, they said buy two, that's 100 shares, right? So whenever it's one, buy two lots, buy one is equivalent to 100, 200, and so forth. And a short call is vice versa. With me so far? Stay with me. At long put and short put, this is just basically if you come from a spread betting or a CFD perspective, you're basically going short. You're betting that the stock is going to go down. So where that green ball is and that blue ball is where the stock stays the same, you want it to go down. So that's where you're up money. When it goes down, in the green, you're up money. And if the stock goes up or stays where it is, then you are up money. Then you're down money, sorry. Because this is the opposite, right? And similarly, 1 equals 100 shares. Here's a nice summary for you that you can snapshot or print out. I print it out because, you know, I'm, guys, totally new to this as well. And I am, over weeks, I'm sure it'll take me months, will be looking back at this chart over and over again. Because, you know, I like dealing with very simple stuff, right? And this is a step up for me. But printing it out, and I'm a visual person, this will make it easier. So I put it My husband hates my wall of what he calls blue tack. So the long call strategy is that you are, the market sentiment is bullish, and the optimal volatility for that, you heard about Tom talking about optimal volatility all the time. It's because you want positive skew in your favor, low to rising. Event suitability, the positive outlook is what we're looking for here for the long call, because you want it to go up. And key factors to monitor, of course, time decay and implied versus historical volatility. The next strategy is the short call. You are bearish to neutral. And we saw yesterday that Tom was bearish to neutral on Tesla, I believe that was right. High optimal volatility and event suitability, stable market expectations, and the key factors to watch. You have to manage risk and monitor margin requirements. Now let's go over to the sell side. So the long put, right? So long put is basically you're bearish, market sentiment is bearish. You're thinking the stock's going to go down. Optimal volatility, low to rising. Event suitability, negative outlook events expected. And the key things to keep in mind, time decay, implied versus historical volatility. Short put, this is bullish to neutral, and we're looking at high volatility here, high volatility for this to be an optimal strategy. Stable market expectations. And what you need to do when you've got a short put is manage risk, monitor margin requirements as well. So here's an example from Sahel. While both bullish strategies perform better than long stock, because you have a higher win and also less maximum loss, choosing the correct strategy, of course, depends on quite a few factors. And most importantly, you hear us talk about volatility all the time, and this is because volatility is your friend. It's not your enemy. In the space of options, volatility is your friend. So let's take a look at this chart. So Hill likes talking and doing calculations on SPY. And I can see why, because it's like the one product. Tom traded just the one product, for so many years. And so Sahil has crunched numbers on SPY since 2006, 45 days to expiry. So the average P&L for long stock is 75 bucks, for long call 78 bucks, and a short put 85 bucks. Your win rate for the long stock is 63%, long call 65%, short put 84%. And short put, remember guys, higher volatility there. Your maximum loss, your long stock 7,200, long call 840 bucks, and your short put 4,500, right? So you have higher volatility, but you are also, your maximum loss is lower. So then Sahil had this question for us, right? Like, how about something like gold? And shout out to some of you already today on the comment that talked about gold. Gold's price and implied volatility. This is a look at 2024 versus SPY. We are looking at March here, which saw a period of rising implied volatility, and the May period, which saw falling volatility. So how do we do? That's the question. Let's see. So March 2024, low to high volatility, and this is still the same exact requirement, SPY since 2006, 45 days to expiry. Just so we compare apples with apples. A short put, total P&L up 159 bucks, premium to open $1.63, premium to close a negative 0.02 cents, long call 742 bucks, the premium to open 151, and the premium to close 895. That's negative 151. May 2024, high to low volatility. And yet again, the same parameters. Short put there, total P&L 127 bucks. Premium to open $2.19. Premium to close negative 90 cents. The long call negative 135. Premium to open negative 183, and the premium to close 49 cents. So here are the key takeaways from these 4 basic option strategies. First of all, they are the long call, the short call, the long put, and the short put. They can be combined in any order you wish to form and express your different option strategies. You often hear us talk about the words express because no one has a crystal ball. No one can tell you whether you're definitely going to make a profit or not and how much your loss or profit might be. However, if you take responsibility and you combine and express how you feel about a stock, this, hopefully, if you've done enough back testing and legwork and you're comfortable with the financial instrument you're trading in, will achieve you a positive skew. For optimal use of options, long positions, i.e. calls and puts, they perform best with low to rising volatility, while short positions, so short being sell, thrive in high volatility with stable market conditions. Long call strategies, so bullish, limit the maximum losses, but they underperform short puts in terms of profitability and probability. And this is why you often hear the tasty people saying they prefer selling puts. And with that in mind, and I'm sure you're going to brew a cup of coffee and take a look at this in your free time, in your own good time, we're going to go to a break.
Corporate earnings reports are quarterly reports that reveal the financial results of a public company. They include valuable information such as revenue, net income, and earnings per share. Investors can use corporate earnings reports to gain insight into a public company's performance. They help investors decide whether it's time to buy, sell, or hold on to shares. So, how do corporate earnings reports impact trading? 1. They affect market indices because indices are made up of publicly traded stocks. Index values go up or down based on stock price movements tied to company earnings news. 2. Corporate earnings reports can signal a healthy or unhealthy economy. They could influence central bank decisions on interest rates and monetary policy. 3. Unexpectedly positive or negative reports have the potential to induce volatility in the stock's price and prompt activity in the market. 4. This surge of trading activity could result in more liquidity. It becomes easier to enter and exit trades when there are more active buyers and sellers. However, increased volume can also introduce greater unpredictability and price swings. 5. Positive reports can bring in foreign investment to a country's market. Negative reports could make foreign investors less interested and reduce their involvement. 6. An earnings report has the power to sway how investors feel about a company or the market in general. How an earnings report impacts the price of a stock depends greatly on what investors expected. If earnings exceed estimates, the price tends to go up. If earnings disappoint, the price often drops. Meeting expectations is key. Even good news might sink a stock if investors hoped for better news. Likewise, a stock could jump if bad news wasn't as bad as predicted. So, how do you trade corporate earnings news? The challenge is to work out how you might react to news that will thrill or disappoint investors. Have an action plan in place for earnings that exceed expectations, or earnings that might disappoint. There is also a chance that the earnings might be exactly what the market expected, and there won't be much price movement at all. Keep in mind that the market can be unpredictable, and these changes can happen in a flash. Options strategies can allow traders to trade big price swings in either direction. Strategies involve buying both call and put options on a stock prior to the report. Call options can protect short positions from rising prices, while put options can protect long positions from falling prices. Finally, it's essential to have risk management practices in place, such as an airtight trading strategy, stop-loss orders, and portfolio diversification. Consider bird's-eye view factors like industry trends, the health of the economy, volatility, revenue growth, and trader sentiment. With preparation, agility, and risk management, you're on your way to trading corporate earnings news effectively.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Hey trader friends, welcome back. Let's just get you across some of the things that happened earlier. Today we had UK preliminary third quarter GDP, which fell negative 0.1%, but also China retail sales rising, industrial output rising there from China, but the reaction on the luxury stocks and also markets as a whole not positive, really mixed out there, which suggests that the weak mood music surrounding China still persists. Japan's third quarter GDP growing 0.9% on an annualized basis. Also, for those of you watching Powell and Trump, Powell saying that if data lets us go slower, it seems like the right thing to do. He, for those of you that were at the event yesterday and missed his comments, he was saying that the US economy still remains robust enough for them to go slower and have a wait and see approach when it comes to rates, he suggests. In terms of the all sessions, let's have a look at that actually with May. All sessions now in play, just getting my screen up here. And what we are seeing for all sessions is quite intriguing. We've got Palantir, those of you that trade the stock, up 3%, MicroStrategy up 1.7%, and CleanSpark as well. Some of you trade CleanSpark up 1.6%. It looks like all the crypto related stocks are having a good day today, right? Blockchain up as well, 1% there. Coinbase up 1.2%. Now, not forgetting some of the Chinese big names. I bet Sosnoff and Rich will be grinning at this because they did feel like those Chinese stocks had been beaten up a bit too much. So if I remember correctly, on the options front, for those of you at the event yesterday, they put on a contrarian bearish enough is enough and I think they looked at these beaten down Chinese stocks becoming bullish now. And Baidu indeed is up 1.2%, just showing you my chart there. Also, the other one that is a big Chinese name, NIO, the ADR here offered on the all sessions front on ID, that is also up slightly. On the other side of the coin, let's have a look. We have a lot of weakness amongst the farmers, not least because of those recent developments in the White House and the health secretary there. Moderna down 2%, Novo Nordisk also down 1.9%, BioNTech down 1.8%. Also taking a look elsewhere, Tesla. I mean, Tesla has had a meteoric rise and then a bit of consolidation there. Let's just have a look at that. This is the daily chart, trader friends. Just getting rid of that for you. As you can see there, Tesla very volatile still and coming off the highs that we saw immediately after that Trump win. But we are looking at a whole host of other things as well. Let's take a look at the indices because US equities opened this session slightly lower there. They fell after remarks by Fed Chair Jerome Powell, who also cited the resilience of the US economy. He did indicate as well that the US economy saw no immediate need to accelerate interest rate reductions, but we are seeing a fall there at the moment. You know, US equities, really, if you take a look at the S&P 500, they are currently looking slightly expensive, in my own humble opinion. And they certainly keep melting up, although it has had a bit of a bounce back at the moment. But S&P 500 trades, well, they're nearly at around 60% premium to global stocks at the moment. Just taking a look elsewhere, because Meta is another one that we have been watching, because Meta is an all-session stock on the IG platform. It is slightly lower. Checking on that because if you heard the news yesterday, Meta incurred a pretty substantial fine of around 800 million euros. This was imposed by EU regulators. This is the first, I believe, of Meta's penalty for antitrust violations in the EU, and it comes from the company's practice of linking its Facebook marketplace service to its social network. Just having a look at defense stocks as well, if I may, because just watching to see if there is a reaction there. They have been lower on the day. BAE Systems down 0.5%. However, just taking a look there because Caleb is just saying that there is some breaking news coming through, or I beg your pardon. Meta, he's saying there is some context there in terms of Trump. We'll have a look at that later. ASML, I want to have a look at that as well because ASML has been moving lower recently. This is the daily chart for you, and it has been trying to creep higher, and we are looking at that 72.8K level. This is the daily chart, but it has not actually been able to punch higher from that. ASML, the Dutch manufacturer, they make advanced semiconductor equipment. So these are the people that make the stuff that makes the chips. So very crucial to global supply chains, reaffirming its long-term revenue projections. However, as you can see there, ASML looking lower at the moment, both in Europe and also both all sessions. In Europe, it is down 3%, all sessions down almost 1%. Right, so if you come back to me now, let's have a look at some of the big events in the coming week. Of course, it is going to be a bit of a nice period for us before we gear up again for some of the retail, and also don't forget we've got NVIDIA. We've got NVIDIA on Wednesday. That's the big one. I don't know whether you saw, but as we were talking about, someone in the crowd last night shouted out, you know, can you do a trade on NVIDIA? Because they were now a bit worried that they're, you know, their bullish position, what should they do with it? And Tom was right. He said, only way is to cut your exposure. And don't forget, it's okay to cut your exposure. I have NVIDIA pretty much expressed in all my pension funds, and I am uncomfortable, so I'm going to be selling puts on NVIDIA. But watch out, it is coming out with results, I believe. I'm right in saying on Wednesday, Q3 results. But also, don't forget the ebb and flow of the earnings season. You tend with the US to come out, and I certainly have experience working Wall Street, you tend to come out with all the banks first, and then everyone goes, ugh. And then you get the big excitement, the techs, right? The FANGs, minus NVIDIA, all the FANGs, you know, all the metas, all that, and you get excited again, and you go, huh. And then you then have coming in the back end, your retailers, and of course your NVIDIA. And so that's where we're at right now. So Monday, there's going to be a speech by Goolsbee. Pay attention to that, especially after JP. We've also got the NAHB Housing Market Index. Those of you that traded the elections, and you will hear me talk about how if Kamala doesn't get in, then it's going to be a negative for housing stocks, housing-related stocks as well. So the D.R. Hortons, the Tolls brothers, all those fell initially after Harris did not win. In the coming week, on Monday, we also have Big Yellow Group out with first half numbers. It really gets exciting from Tuesday onwards. We have the RBA meeting minutes and also the API crude oil inventories, you all that trade WTI, that's a key one. We've got Imperial Brands as well. And talking about retail, Currys, Boohoo, out with first half and trading numbers, trading statement out from Currys. ThyssenKrupp also out with full year numbers. And as I mentioned, the retailers from the US coming out, got Walmart on Tuesday, out with numbers there. Wednesday, we've got UK Consumer Price Index as well. On Thursday, we've got UK public sector net borrowing, those of you that trade sterling, and also the Eurozone consumer flash numbers. Crest Nicholson out with a trading statement, and JD Sports. Friday, finally, UK retail sales. There's a big retail week to trade, and the also the UK S&P Global Manufacturing Services PMI. This is a flash number. But of course, the big key number comes midweek with NVIDIA numbers. And on that note, have a great weekend, happy hunting, and see you on Monday.
It's a day of red in stocks. Is that meaningful? It's Thursday, November 14th, 2024. This is Overtime. I'm your host, Chris Vecchio in New York. He's Ilya Spivak in San Francisco. Dylan Radigan, somewhere 30,000 feet above the earth. We'll see him back on Monday. We're here to take you through the next hour. Well, half an hour, that is, here on Overtime. It's the abridged version because it's Thursday. The second half of this hour is, of course, the prediction trade with myself and Jeff Joseph. Be sure to stick around for that as we talk about some of these betting markets around Trump's cabinet appointments. But before we get there, we need to cover what's going on in these futures markets today, Ilya. It was a day where both the S&P, the NASDAQ turned lower, but the Russell was the leader to the downside. This morning's data that we've seen come out doesn't necessarily move the needle. We've had CPI, we've had PPI. We find ourselves with a set of statements from Fed Chair Powell that the Fed is in no rush to cut rates, perhaps. A sign that maybe the December meeting is going to be a little bit more testy than what the market was pricing in earlier today or even just yesterday. Aside from that, gold and silver continue to pull back. The dollar continues to surge versus the yen versus the euro, although a late day turnaround. But I guess the question is the worst over. Ilya, we have 25 minutes starting now. Let's get into it. Let's first talk about the inflation report and some of the PPI data that we've seen come out here. The inflation trajectory, it's worth updating this now. So PPI this morning, slight acceleration. When we think about where PCE is heading, it's probably still in line with what the Fed suggested because both PPI and CPI have come in right on the nose in terms of market expectations. I bring up our inflation trajectory dashboard, if only to help us visualize what happens to inflation if we were to increase at 0.0 or 0.1 or 0.2% month over month for the foreseeable future. And once we get through the end of this year, you can see that the base effect window begins to dissipate. And if we just proceed at 0.2% month over month, we're going to clip a 2.05% headline CPI by March of next year. That said, Ilya, Powell doesn't seem like he's in a rush. He thinks that these bumps in the night that are coming up here, this uneven path back to 2%, is what's going to give the Fed pause.
He said as much. And of course, we talked about this yesterday. I've talked about it ad nauseum on Macro Money, this idea that really the story has been unchanged since basically the first half of September. PPI was a little bit hotter today. CPI was in line with expectations, but that was also the fourth consecutive month that disinflation didn't happen. And we know how this works. The Fed looks at stalling and says, right, let's go ahead and take the foot off the gas on these rate cuts. We saw this toward the end of the first quarter. We saw what the markets did with that as economic data started to sour from April to about the beginning of September. The market said, the Fed doesn't want to cut. Okay, they're late. Build out a bunch of rate cuts into 2025. We're seeing the inverse of that movie now, where from late August, U.S. economic data starts getting better relative to expectations. So when the Fed finally makes the move in September and it's very dovish, the markets go, you're too dovish. You're going to reflate. That becomes the bottom in the dollar. That becomes the bottom in yields. Gold takes a while to come around, but boy, is it catching up now. And you have a situation that, again, leads you to repricing of Fed policy expectations. They've been cut in half relative to the Fed forecast from September at this point for next year. And to your point, December looks uncertain. Powell came out and said in no uncertain terms, if you all thought that we're on dovish autopilot, stop it. We're not. That's not what we're doing. And the markets are clearly responding. We have another green day for the U.S. dollar. It continues to power higher. It's at this point at the highest in 5-6 months. Big breakouts against the Aussie, big breakout against the Canadian dollar. Yesterday, I got short that to add to my quiver of dollar longs. And I just keep piling in. Gold keeps breaking down. I've added more. The euro keeps breaking down. The pound is right on the line here. That could be an interesting one to watch. We have GDP out of there, which is biased perhaps to a downside surprise coming out overnight. That could be the next one to layer in some more exposure to. But all of this sort of follows on. The really interesting bit is that stocks, until perhaps today, have been relatively resilient. And that, I think, echoes what you and I have discussed at length about the experience from earlier in the year. We saw this movie in the first quarter. The Fed was reluctant to cut because the U.S. economy was getting stronger. The markets started to dial back rate cut expectations. Then also they cut them down from 6 cuts to 3 for 2024 because they said, okay, well, the economy is warming. The Fed's not going to be able to do as many cuts. But this is not bad news. This is good news because the economy is strong. That's not a reason for stocks to come down. And so you were able to see rate cuts go away as the economy was strengthening and as rate cuts were falling away. That's not where we are today. The global economy has decoupled from U.S. strength. It was growing in tandem with that strength in the first quarter. Europe was accelerating, China was accelerating, global growth was improving. Now it's deteriorating. And the U.S. has gone off into a corner because everybody is spending basically on domestic services. We just saw it in CPI data earlier this week again. All of inflation is stuck in one area, and none of it is friendly to spilling over U.S. prosperity across borders. The U.S. mainly imports goods. That's not where demand is. And so when you look at the current situation, earlier in the week, you get stocks a little bit skittish the day before CPI because they fear it might be hot. Now you see them turn today as Powell talks. They shrug off the PPI number. They wait. That PPI number is a little hotter relative to expectations, but they don't react. They let Powell speak. Once he does, NASDAQ rolls over, S&P rolls over. And so perhaps the markets are finally starting to get the idea that if we ratchet up global rates because of a more hawkish or at least a less dovish Fed, that this is bad news for a global economy that's weakening.
The dollar continues to rampage. I couldn't help but notice today that the spat of growth-sensitive, China-sensitive things continues to struggle. The Australian dollar down by 0.5%, FXI down by another 1% here.
I got a little bit more short the Aussie actually earlier this morning.
What's the China story? Is this still the market shifting capital away from a country that's likely to be targeted by trade war in the very near term?
I mean, certainly that's a part of the story. I think it's quite clear in the at least nomination of Robert Lighthizer back to the U.S. Trade Representative role that the tariff in chief is back, that the path will be combative. I think the nomination of Marco Rubio for state, another big, loud China hawk, that's telling. The nomination of Waltz for National Security Advisor, another China hawk, that's telling. But also, China has no demand to speak of. We had another set of woeful inflation numbers that were released over the weekend. They followed widely sort of interpreted, then reinterpreted trade and PMI data last week, which showed that there's a swell in export demand as everybody seems to be trying to front run the tariffs and get a bargain before they are instituted. And outside of that, there's no demand. So it's a fleeting sort of situation. We're going to get retail sales and industrial production numbers that come out later today, overnight for the U.S. And if the story looks something like strong industrial production, weak retail sales, the story will be, right, you remember that export jump last week? That would be that. Meanwhile, domestic demand is nowhere. And that big party conference they had in Beijing at the beginning of November produced nothing in fiscal stimulus. Not a thing. Everybody was sitting there going, oh my God, this is the time. They're going to finally do it. Yeah, no. Maybe they're waiting for Trump to actually levy the tariffs and then actually make a move. Their interest rates are certainly low enough. They could borrow with impunity to move on stimulus, but they're not doing it. They have seemingly no appetite. So as long as these half measures continue, data like we're about to see again is probably going to disappoint, and the story in China is going to continue to look woeful.
If it's copper, if it's FXI, if it's A shares, if it's the Australian dollar, there was a bunch of struggle here throughout today's session. Even oil today, we see it move up, but really doesn't hang on to its gains.
Frustrating.
It's only about a quarter to the upside right now. The volatility continues to come in, though. The low IVR for the day was 18.95. It's almost to say that between we've seen in gold
out of this position.
Between gold and oil, I think there's a very marked reduction in geopolitical risk premia, at least in the very short term.
Yeah.
What do you make of the inventory data today? Gasoline drawdown a little bit more than expected, but we're seeing that oil inventory is up. Is the global economy improving?
I'm not sure these things mean very much. It's 1 week's of worth of data. There's not really big things here, and the outlook on crude matters, or it seems to focus much more, at least recently, on the geopolitics of the situation rather than anything happening on supply and demand, because the story on supply and demand is pretty straightforward. The U.S. has all the oil it could possibly imagine. At this point, we are the largest petroleum producer in the world, bigger than Russia and Saudi combined. That's not going to change under the incoming administration. If anything, it's only going to get more overt. The story from the cartel side of things, as though they matter, is that even they are backing away from seeking higher prices. Saudi has jettisoned their $100 a barrel target, seemingly. And so you have a situation here that from a supply-demand perspective is very clearly pointed in a direction from the upper left to the lower right. It's pointing down. It's been pointing down really all year. The question geopolitically and why we seem to be sort of stuck here a little is what happens with foreign policy, because obviously with these most recent nominations in the U.S., that is very much in flux. There's been some really interesting appointments, or nominations, I should say. Gabbard for Director of National Intelligence, Hegseth for the Department of Defense. These are not what you would call traditional choices. And so how all of that makes the situation different, perhaps, in the way that the U.S. handles the Middle East and Ukraine, that could be a part of sort of this weirdness. Now, those people may not get confirmed. In fact, if you kind of think of the president-elect as sort of the consummate poker player and chaos as the consummate strategy to keep opponents off balance, these nominations could be an opening for negotiation with the Senate, and ultimately designed to say, okay, don't give me these, but then you have to give me these other ones. And maybe we'll see what that means for the nominations at State, what that means for the nominations at Commerce, the Treasury, all of these things. But I've backed away from crude because at the moment it looks like a dead market. It's really frustrating in that it goes nowhere and just marks down time to DTE on options, which when it finally let me out with a modest loss near break even this week, I said, you know what, the hell with this thing. I'm out of here.
One of the great things that the Dallas Federal Reserve provides, this static URL at their website where they update all of their energy charts for the country, for Texas, over the course of every few months. So be sure to check this out. The last update was September 19th. Resource. If we go down to the second to last slide, which is literally the one before the disclaimer, it's one of the reasons why I have such a difficult time wrapping around my head around the idea that we're going to see a big influx of U.S. supply, because it's what the president wants. U.S. capacity is pretty much at the brim. Right now, according to the latest survey from the Dallas Fed, this is from 87 E&P firms. So it's not a small sample size by any stretch of the imagination. If we're talking about shale, Midland, Delaware, scoop, non-shale, or other, which is the Permian, all the different grades, if you want to get that oil out of the ground, what is the cost? What is the profitability that we need to have per barrel of oil to make it worthwhile for that project? Ranging from $59 up to $70 a barrel.
Yep.
So $70 a barrel right now. Let's go to the CLF5 contract. We're trading at 68.46. So that means right off the bat, Permian, you're not going to get new production out of. If it's non-shale, if you're in Oklahoma, right?
Yeah.
If you see we're at $68 a barrel right now, when you say your break even is 66 or 65 or 64, are you really thinking, yeah, this is it? We're going to go through all of this to capture that dollar per barrel. Is that really worth the juice?
Not unless there's new subsidies or tax incentives or something like this to, let us say, butter up the audience.
I don't know if we're going to get more U.S. oil supply. Now,
maybe not.
Trump has had success leaning on OPEC before. And we've seen that Saudi Arabia and a number of other OPEC countries have made some interesting moves in the immediate wake of Trump's victory, particularly on the diplomatic front. So perhaps Trump can convince Saudi Arabia to, you know what, hey, we're either going to produce this, we're going to flood the market, or you guys are. They get more subsidies and they can lower the per barrel cost for those producers by $5 or $10 a barrel. You know, Trump said he's killing the EV subsidies and tax credits. He's made no mention of killing oil subsidies.
Might also be a negotiating tactic to get geopolitical outcomes out of Saudi vis-a-vis Israel, Hamas, Hezbollah, et cetera, to say, you know what, we could dial up drilling. One of the interesting things that's occurred in the U.S. basically since 2014, we're producing all this oil, but we've also become much more efficient. The number of oil rigs that are operational in the country has been falling. The number of fracking sites that are active has been falling. And so you get to a situation here where output is up, the capacity used to get output up is actually declining.
You can see that here on this slide, where Texas rigs have now 274, and yet Texas crude oil production per day is at its highest level ever.
That's right. So we've become much more efficient. So one argument that the president-elect could take to Saudis, say, you know, we really could structure financial incentives to turn these rigs back on. And then we could produce all kinds of oil, even if it's non-economical, as long as we think it's geopolitically necessary. We could make it worthwhile. We could dial up energy subsidies. We could make the grab bag sweeter. So if that's what you'd like us to do, we can do it. But we could not do that, and then you could perhaps help administer a post-war Gaza or some such thing.
I don't really have anything cooking right now in oil. I don't have anything cooking right now in natural gas. Natural gas has a little bit more of a difficult day, down 7.34%. It's erasing what was been a pretty good week so far, basically back to where we opened up after the gap higher.
Yeah.
I don't really have a story to tell in here right now. The inventories aren't matching up, and quite frankly, I think we're in a holding pattern through the end of the year. Seasonally, it's not a great time for energy, as it were.
It's another big geopolitics thing, to your point. Until the end of the year, Ukraine has implications here, supplying Europe with energy, and another target for the president-elect's ire. That's a part of this story, and natural gas is so crazy and so disconnected by itself. I want no parts of it either.
Gold is at a really interesting spot for people who have been perhaps having some difficulty trading it directionally or avoiding it. It's just not your style. Perhaps a new perspective here for those individuals. The high-low range that we've been looking at, basically going back to April. In fact, just to demonstrate this, let's just change the coordinates on here to 4124. Okay, so the range that we have basically going back to April, April swing lows initially, or June swing lows back to the highs that we have at the end of October, we are at the 50% mark. and it's still a 68 IVR, which isn't exactly where it was just a few days ago. Granted, at the start of November, we were looking at IVRs, popping up into the high 80s at one point. Nevertheless, this is still a relatively elevated vol environment compared to where we've been over the past year, all things considered. And we're at a swing point where we found resistance back in July. We carved through that wood in August and September, only to punch through on September 12th. This is a really long lower wick here. It's too soon to say that we've turned the corner, of course, in something like gold, right? Momentum is still very, very negative. But if there is a place for the market to stabilize, not turn around and start rallying, this would be a place where it could stabilize for a little while. And so looking at this with fresh eyes, again, for those who are a little bit more on the directionally neutral side, you have your 2800, you have your 2350 here in GCZ4, and operating around those bands through the end of the year, saying that we're not going to break the 6-month high lows, may not be that difficult of a sell. And if only to put a cherry on top of that here, the decline that we've seen in gold prices over the past 7 days has been the steepest decline in gold prices that we've seen since the early days of the pandemic. That obviously didn't stick around, and this is a very unique type of falling knife environment. So, Ilya, if I've been short like you were, I would think that this is a really good place to maybe perhaps take some profit, put some of those gold coins in my pocket now that I'm able to buy back at a cheaper level.
I'm looking at that actually, and I'm watching very closely with exactly.
Full disclosure, I'm still long, so yeah, I hope the market turns here, right? So like speaking my book a little bit, but
sure. Well, I mean, be that as it may, this is a major level of support. We obviously had a level of circumspect thinking here on a test. The wick on that candle tells that story, and so when you look at this, you go, okay, well, if there were a logical place to bounce, this would be it. I think in my thinking, when I look at this, I then immediately look at the October 10th low and say, okay, that's support. It is now resistance. That's the line in the sand. If you get back above that, out. And so what I might do here is I might lighten up a little bit depending on how things develop overnight. Obviously, Asia has not yet priced in what Powell said. Neither has Europe, and it certainly gave stock markets and the dollar some reasons to move around. So we'll see how that goes. You get another punch in the dollar because the data out of China or the UK are weak. Could be a different story. We also have retail sales out of the U.S. tomorrow, and if it keeps going the way U.S. economic data has been going, the bias is to a surprise higher. That could very quickly make for a breakdown in gold. So I'm watching this carefully here, but to your point, if ever there was a spot for this down move to run aground, this is a very logical one. And so I'm watching closely with my finger on the trigger, as it were. I'm going to be out of this very quickly if it starts to behave wrong.
Ilya, we don't have an episode of Overtime tomorrow, but you and I are going to be back together on Futures Power Hour to talk about how the markets are closing out the weekend, ultimately what we should be looking for as we make our way through the second half of the month. I'm getting on the prediction trade next to talk with Jeff Joseph about some of the latest developments in the betting market with respect to Trump's cabinet picks. One of those markets may be resolving close to 100% now because some news about maybe RFK Jr. came down the pipeline. So be sure to stick around for that. And then, Ilya, you're going to be back for Macro Money at the top of the hour. So Tasty Live programming does roll on. But for now, Overtime is out of time for today and for this week. We will be back Monday, same time, same place here on Tasty Live. Always after last call, 4 p.m. Eastern, 3 p.m. Central Time. So for Ilya Spivak in San Francisco, I've been Chris Vecchio here in New York. Make sure you stick around, though. We'll be back after a brief break with the prediction trade. Welcome back. This is the prediction trade. I'm your host, Chris Vecchio. He's your co-host, Jeff Joseph. We're here a week after the presidential elections, Jeff. where we finally know the results. We can finally turn the page, or can we? There are new betting markets out for the cabinet appointments. We have a lot of ground to cover still.
Lots to cover, lots of new markets. I have to hand it to Kalshi. They've done what they said they needed to do in light of all the influx of money that they saw shortly after they were approved as an exchange and to run the election markets. In recognizing that they had an influx of about 150,000 traders and they had to give them something to do, they've been throwing up markets quickly, almost as quickly as Trump's been appointing names. So there's been a lot to look at over at Kalshi in the last couple of days. So let's talk about it today.
Jeff, we have been going back and forth about the shape of the election here. Who's going to win the popular vote? It's angling towards Trump. By what margin that victor would come and play? How many seats the House of Representatives will have at the end of the day? Because the Trump transition team has been raiding the House to a certain degree to fill out his cabinet, as he is wont to do. Jeff, you and I were also talking off screen about how people may be playing some of these newer markets as it pertains to individual House races right now. You mentioned some of this in the Luckbox magazine, though. So before we get into the prediction trade, why don't you talk to us a little bit about some of the betting market focuses in this week's Luckbox magazine?
Sure. We'll do a weekly plug like we always do. Luckbox magazine. It's a digital magazine. Comes out every Thursday around 11 o'clock Central. It's free. Go to getluckbox.com to subscribe. And we always cover the prediction markets in every issue. Today, we opened it with a story about the Polymarket CEO, Shane Copeland, who was woken up at 6 in the morning yesterday by the FBI, who came in and took away his phone. Nothing else. He wasn't arrested. No charges were filed, but they did take his phone. He immediately cited it as political retribution for having a platform that called Trump an easy winner when all the polling said it was going to be a close race. Bloomberg reported later in the day that it was likely, or they believe it to be, an investigation into whether or not U.S. citizens were improperly accessing Polymarket to trade, because remember, that platform is restricted from U.S. citizens for trading. And it's a story we're going to be watching. It's one of the things we mentioned in today's Luckbox. We also took a look at DraftKings, who acknowledged, and we're going to be covering sports and the prediction trade going forward every Thursday at this time at 3:30 Central. And it's interesting to note that you can beat the house. DraftKings, in their earnings report a couple days ago, said they lost $250 million to NFL bets that just went against the house, that even their algorithms couldn't slice it the right way. When you have fantasy players, when you have favorites that are scoring points, it's hard to adjust the spread to keep it a house neutral scenario, and that's what happened. They acknowledged $250 million in losses in NFL wagers. That they're in business just to collect the vig, but in this case, the bettors actually prevailed. So that's some of the things we talked about in today's Luckbox, but I think we should go over to Kalshi. You just mentioned some of the house races. I placed a trade today, and I thought we could walk through the anatomy of a trade. It's one thing, and you and I were chatting earlier about, what's going on right now with Trump's appointments. In fact, a moment ago, it's been widely reported now within the last 15 minutes. So those of you watching this on YouTube later on, keep in mind that we're talking about Thursday afternoon, but that RFK is a lock for the Health and Human Services appointment by Trump. And here's that market right now. When I heard that, I bought at 78. I don't know. We'll see. You see where it's trading right now, live at 77, but it seems to be a high probability play. Ben Carson, I understand why he was there, but he's acknowledged from the outset that he was going to do something with RFK, and this seems like where we're likely to go. So I thought it was a reasonable play, and I'm in there as well, long from 78 cents right now in that RFK market. But what I thought, any thoughts on that, by the way?
Can't say I'm surprised. We heard this on the campaign trail. Part of RFK throwing his support behind Trump was MAGA and MAHA are forming an alliance. Right. Make America Great Again meets Make America Healthy Again. Right. And RFK is, of course, the front runner for that. So I think part and parcel to throwing his support behind Trump was, if you win, I would like a spot in the administration, as political deal makers typically do. I don't think that should shock anyone. And sure enough, it looks like Trump is fulfilling the promise to staff the campaign and the cabinet with people who are unconventional, not part of the system, who are not part of any institutional favor, and ultimately may shake things up in a manner that you may like or not like. But RFK fits the bill. He's been the front runner. I was honestly shocked that he was not the front runner, the entire time.
Right.
If we're going to be straight shooters.
It's a good point, but Trump is hard. For example, I don't mind admitting, and we talked about it last week. You had a great stretch in the markets. I had a great stretch in the prediction markets on election day. I was on the right side of the equation there, and dealing with some profits and some extra cash. Took a flyer on one of the Trump appointments and lost. It was a small one, a small wager. So I'm really happy with my my batting average over on call sheet. It's well over 80%, 85% probably over the last couple months, but lost that outright. And because Trump is so unpredictable, and it was a reminder to me. That's pure speculation with not a lot of indication. With names like with Matt Gaetz and Pete Hegseth coming out of nowhere, I think it's pretty hard to run these. But this one, in light of the widespread news reporting that occurred and that you could still buy this market at 79 cents, that's right where I bought it, where it's trading right now. The market's essentially saying it's an 80% probability. I think that's a fair value, but I think it's a high probability outcome. So that's why I went long RFK at 80 cents. But there's a market that's open that's offering a little better odds for some good reasons. I'd like to take a look at it. It's the California House District 13. California House 13 is, it's trading right now at kind of a dead heat. The play that I'm talking about here is John Duarte. John is the incumbent. Took office in January of 2023, and he's the incumbent right now running for re-election. And I'd like to show you the handicapping that went into this trade, for better or for worse. We don't know the outcome. I am long Duarte. I bought him originally at 30 cents, and then today I tripled up on that at 49 cents, or at 50 cents actually. So where we are right, that gives me an average position at about 42. I'll probably stop that somewhere around 37 or 38 because there's fast markets. If a new round of ballots drop from Merced County, which is probably up next, that might immediately have an indication. Unless you have stops in to prevent your loss, you can find yourself trading at 10 cents in a fast-moving prediction market. So that's where I am right now. But let's talk about why. And I wanted to take a moment to kind of walk through this. And we can start by looking at the, let's go to Decision Desk. DDHQ is a website that most political prediction market traders use frequently. And if you click on California right there, in fact, you can see California House District 13 is right there. So here's where we stand right now. It's that shaded area. There's a 2.4% lead right now for Duarte with 75% of the votes in. So that's how it's looking, but this is California, and this is a Republican, right? So there, you really have to take a look at what's out there. 25% of the votes are out there. If you're looking at 150,000, that suggests there's about 50,000 votes that still remain uncounted, and that could easily overtake this 3,600, 3,800 advantage that Duarte currently has. So what you have to do is get a little bit more granular. If you click on that, let's see. Well, no, let's go over to the House District map. And if you, all right, so now we're over on Decision Desk HQ.
Yes.
Right. And if you look at 13, there's another link I think I gave you that will give you a, well, let's go to I'm sorry, let's take a look at the presidential side first. So click on California. And then if you, so right where you see the F in San Francisco, that's where it starts. That's San Joaquin County. Right now, it's pretty close to dead heat there. What we're looking at is how Trump versus Harris came in, and that's always going to be an indication of what the likely vote lies ahead. Currently in San Joaquin, 85% of the votes are in. So I don't, and it's running as a dead heat for Trump. So I don't expect that to tip the election going forward. Drag your mouse down one notch. Now you're looking at Stanislaus County. 70% of the votes are in Stanislaus right now. That's a 67, but another site's told me it's 70%. Trump won that by 12%. So you'd expect that there's some headwind in that market for Duarte. Currently, gray is up 5%, 5 points in that market right now, with 30% of the votes outstanding. So this looks like a county that's going to tilt some votes towards gray. If you scroll down to the next county, you're going to get to Merced. And Merced is about 66% of the votes are in. Trump won that by about 7%. And currently it's a dead heat in that county between Duarte and Gray. I expect it's not going to tilt the scales when the final tallies come in. Go to the next one. Now we're getting closer to Fresno. You know, it's Madera and Fresno. In Fresno, Trump won by 5, and currently Duarte is up by 12. I expect that market's going to even out a little bit more and get closer to 5, but it's still going to lean towards Duarte when all the votes are counted. And then if you drop down to the last one in Madera County, yeah, Madera is next. So what we've just looked at is the San Joaquin Valley, where these 5 counties exist. That includes, like I said, Fresno, what is it, San Joaquin. Those are the cities there.
Merced, Stanislaus, yeah.
That's right. So in Madera, Trump won by 20, and Duarte's up by 14 points there. So when you look at, so I took these numbers, and what you simply do is you make a spreadsheet, and you say what was the current ratio of votes counted, and if it's at least over 50%, you can use that to extrapolate what the likely vote count will be going forward on the remaining votes. There's 5 counties in play. I added up the difference, and it came out to Duarte slimming on his lead a little bit. He's up by about 3,700 votes right now. I see him prevailing somewhere between 1,300 and 2,000 votes if the current vote totals extrapolate forward. He's in front right now. You know, he's Portuguese. 71% of CA House District 13 is Hispanic. He's a Republican incumbent in a section that has a high favorability for Trump, who won pretty well. It was recently a subject of redistricting, and the redistricting went in the favor of the Republican incumbent. Even though the 13th district in California is considered to be a swing district, I think considering the outstanding votes, that this leans pretty favorably towards Duarte. The market, if we go back and take a look at where the market is right now, they're calling it a toss-up.
50-50.
A toss-up, right. I went over to Decision Desk's Twitter feed. If you can click on that, I think I provided you that link as well. And you can see here it says in the California 13 race, Duarte received some good news last night when Merced dropped 5 points, yet it's his opponent's home county. So that's a really good sign across the board. So we have a Portuguese businessman, he's the incumbent, he's a Republican, he's in front of the race right now. The outstanding vote counts, for the most part, are favoring him, except for, you know, I'm admittedly a little bit worried about Merced County because it's a dead heat there right now, and 1/3 of the votes are still outstanding. But Trump did win that county by 7 points, and I think this looks like a really solid play. So obviously, everyone's got to make their own decisions. This is not a trading recommendation, but this is the analysis that prediction market traders will use when they place a bet. You'll take a look at what's out there. You extrapolate the current trends and expect them to continue, particularly with a small voting sample. There's not a lot of room for error with only, what I say, about 50,000 votes outstanding at this point. And I think, you know, we're looking pretty good, up 2.4%. I expect that's going to thin a little bit, but Duarte should still come out ahead. I've projected a 1.3 to 1.5% advantage at the outset, and that's why in this toss-up race, I'm long Duarte with a stop around slightly under 40 cents. So wanted to give you the idea of what a trade looks like and how you can use different tools. In addition to Decision Desk's HQ, New York Times has a pretty robust site with real-time ballot reporting. You also have to look at Twitter and also local sites that drop totals often before DDHQ and the New York Times receive votes as well. But that's what goes into the underwriting of a House race or a Senate district that most of us prediction market traders are using on an active basis. Simple spreadsheet will extend your calculations and will give you some projected results.
Jeff, that's a really easily understandable way for traders to approach, dare I say, normal markets. But a lot of the markets that are currently listed right now in Kalshi aren't exactly normal. One of the ideas that we've been contending with here is now that Donald Trump is going to be president again, we all have to relearn Trump speak from the 2017 to 2020 era. That's not just a me thing. If people wanted to look this up on their own, there was a discernible impact on equity market prices whenever the president would tweet something out. And it's because there's a bit of randomness in the approach there. You don't really know what he's going to do. For the Always Sunny in Philadelphia crowd, he's kind of like the wild card in a certain sense. And to that degree, my attention turned yesterday to the Attorney General market, where right out of left field, here comes someone who is not even listed on the contract board, Jeff. Matt Gaetz, the inimitable congressman from Florida, is the nominee for Attorney General. He was not a listed candidate yesterday when that announcement was made.
That's right. That's right.
Does that kind of event inform you on how you should be approaching any of these Trump picks moving forward? Is there a randomness variable that maybe influences how much you would want to put into any one of these cabinet trades if you're operating in those markets?
Sure. In fact, I didn't really articulate that thought at the top of this segment, and that's really where I was going. As you and I both boasted, and let's see what happens with California House District 13, but we both boasted about our trading success and over the past weeks. And then I took that with a little bit of confidence and took a flyer on a Trump pick that immediately evaporated. And it was a reminder of the exact point you're making right now. You can make tactical, well thought out strategic wagers using spreadsheets and extrapolating vote results and using information that you have access to. But the mind of Trump is pretty unpredictable. That's what makes him such a potent political force. At the same time, it makes it something that's not really that wagerable. So I've caught myself. And other than this last minute quick flyer based on what I think is part of the inefficient market aspects of Kalshi, right? We have a public announcement. It's hit the wires. It's been out there for about the last hour now that RFK is going to get this appointment, yet that market was still trading at 80, where was it when we looked at? Here it's still trading at
80 cents.
80 cents. And as you mentioned over the weekend when we were exchanging some comments, this implies you can buy $1 for 80 cents right now, if that's indeed the outcome. In fact, the market that you actually mentioned that you could buy $1 for 94 cents was a conversation we had. I think you can still buy those dollars for 97 cents. I'm trying to remember what market that is, but that market hasn't closed. But it's a long answer to your short question. Kalshi markets, prediction markets, are still, despite the type of volume and activity they're getting, they're still relatively inefficient. And, in the perfect world, you would expect that these opportunities are going to get arbitraged away or they're going to be diluted by the subsequent volume that finds themselves in these markets. But in the meantime, that's not the case. And that's why there's a lot of prediction market traders that are used to picking up nickels and dimes in scenarios like that, where the market, just hasn't resolved itself and there's still a trading opportunity. So we'll see if that's indeed the case. And we're accountable for everything we say here. And, we can talk about it next week, how RFK, if he ends up in that slot, and how California House 13 ends up. But in the meantime, and excuse me while I adjust this, but in the meantime, that's one of the things that represents the appeal of prediction markets, is this relative inefficiency.
Yeah, Saturday night we were talking. I shared a tweet from Garrett_Archer, who calls himself the ABC 15 data guru. I guess he's a local data junkie out in Phoenix. And that's actually one of the things that traders should do. Follow the local reporters who are on the ground. Forget the big MSNBC, Fox News, CNN type of accounts. You want to follow the people who are actually on the ground on a state-by-state basis. So this guy posts this alert on Saturday, not even Saturday night, it's actually 11:49 a.m. Eastern time that I sent this to you. He says, last night at 9 p.m., Yuma posted 1,763 votes in the U.S. Senate contest. Gallego won the batch, 51.3 to 45.7. He leads now with 32,417 votes, with only 31,000 outstanding ballots in Yuma. So later that day, when I said the Arizona Senate race is now over, they're selling dollars for 94 cents, it's because these markets weren't updating in real time as the information was being pushed out into the world of Twitter or X. And if you had gotten in long at 94 cents when the data came out and just the number of outstanding ballots was smaller than the vote differential, then it was a quick 6.36% return on Saturday evening in the span of, what, a few minutes? And I think that's really the key here, right, Jeff? You point out these decision desk feeds. You point out, I'm pointing out the Twitter feeds here. These are still very, very nascent new markets. Yeah. They don't synthesize information really all that well or as fast as regular financial markets do. If you can find an information edge, if you can find a way to plug numbers into a spreadsheet and synthesize that information faster than others, it's really still dominated by people. It's not dominated so much by machines, and you can find a way to place trades successfully here.
That's right. And I'm smiling because I recall that conversation we had, and you went on to extrapolate that 6% return occurring in less than 1 day to what your annual return would be if you continue to do that.
Yes.
So yeah, that was very
I'd be retired by now, Jeff. That's the thing. I'd be retired.
You should be retired by right now. That's exactly right. But it's also indeed the case. Those are the kind of scenarios that occur all the time.
We just got to make 6.36% every 45 minutes, and we'll be good. We'll be good.
That's right.
Go ahead, though.
So let's go back and take a look at Kalshi's main page, because I think it's a fascinating tribute to them, how quickly they're responding to the market, opening up new markets quickly. I imagine there's going to end up being a will Gates be confirmed market, because that seems to be an interesting play that's out there. And let's just scroll through and see if anything jumps out at us. And well, there's Gates right now, who will be Trump's attorney general. Very interesting that even though Trump has acknowledged that Gates is his pick, what this market now is undoubtedly lingering on is whether or not the Senate will approve the appointment. So there seems to be a prevailing wisdom that Gates will not get through Senate confirmation. Again, for the reasons we mentioned. Well, this is a little bit more. This you could do reasonable due diligence on, I think, even though it would have been nice to see the closed vote that resulted in Thune's election, because I think that'd give us some indication as to how the Republican Senate internally might be fractioned, how it's fractioned and how it might be divided. They asked for a closed vote on that confirmation that Thune prevailed on, and if we had transparency as to how the senators voted there, I think we'd have more of an indication whether or not Gates may prevail. But this might be an interesting market to evaluate more. Any thoughts on it?
I don't think that Matt Gaetz has the relationships in the Senate based on everything that has been publicly said thus far to date, not just in the past 24 hours, but what people have been on the record saying about him going back years. I don't want to move into any speculation or bring those things up. People can Google Matt Gaetz and whatever rumors there are about him.
He might be more concerned about his relationships outside of the Senate as to how they might impact his confirmation status. But I would agree with you.
That's not a minor concern. That's not a minor concern.
All right. Enough of the metaphors, right? Enough of the puns. I get it.
but we talk about the recess appointments, right? That is the key thing here. Recess appointments. Mm-hmm. Article 2, Section 3 of the Constitution stipulates that the president can adjourn the Congress. This is one of the reasons why he was saying in Trump world with Elon and Don Jr. over the weekend, were saying that whoever's going to be the next Senate Majority Leader needs to agree to recess appointments. And it's such that the president can fill his cabinet without needing the 50-plus votes in the Senate to get there. Operating under the assumption that Democrats are effectively going to be a blank slate, no on everything then, one would assume that Republicans need to carry all 53 votes, or at least 51, to get across the finish line. And so when you have people like Susan Collins and Lisa Murkowski right off the bat come out and say, this isn't the guy for us, we're not going to vote to support him. And then you think about the contours of things that Lindsey Graham have said, or Mark Wayne Mullen have said, or Tom Tillis, right? then all of a sudden 50 votes looks like it's in question. So I think the key here would be, and this may be kind of like the kill switch for everything across the board, every single cabinet pick moving forward, to the point where if I heard Trump utter this phrase, if Susan Wiles, his campaign manager, said this is what's going to be happening, now the new incoming chief of staff, or Trump himself were to mention this, that he's going to invoke Article 2, Section 3 to adjourn the Congress as soon as the new Congress is in session so that he can put them into recess so he can do recess appointments, because John Thune et al. Will not cooperate. Every single one of these markets where Trump has a preferred candidate should trade to 100.
That's right.
In theory.
Yep.
And so I don't care what Matt Gaetz looks like, a reprehensible pick here for myriad reasons. My personal view, I think a lot of Republicans share that view. If you look to what people at like National Review or even some folks on Daily Wire were commenting about Matt Gaetz yesterday. So this is not a, partisan perspective. Mm-hmm. But at 40 cents, if Trump really wants to push this through at recess, they are selling dollars at 40 cents here.
Yeah.
And that is the reality. That's one of those Trump factors where there is an ability to get these done. And so, will RFK pass muster in a Senate that's pretty closely divided? Maybe. So he's not going to trade at 100 cents right now. There should be a little bit of a discount there because there's uncertainty that he could get rejected.
Exactly.
But if Trump says recess appointments are coming, take seriously and literally all of his picks, including Matt Gaetz for Attorney General, which at 39 cents right now, we could be looking in hindsight that this is a relative steal.
I'm curious. Click on Matt Gaetz's name right there. Let's see what the order book looks like here. There's a lot of asks out there at 43 and 44 cents. And again, a reminder: whenever you're on Kalshi and you're contemplating a trade, just click on the contract name, and you can look at the underlying order book, give you an idea what money's out there on the sidelines waiting to get in. Okay.
And conversely, Jeff, there's that attitude out there that maybe Gaetz is kind of like the sacrificial lamb, where Trump says, okay, Senate, you didn't give me my Attorney General. I'll go for a compromise pick, but then you got to give me these other people that I want in there. You got to confirm Tulsi Gabbard to DNI. You got to confirm RFK to HHS and, Hesgeth to Secretary of Defense. And there could be some, donkey trading in the background.
Right.
And that's all part of this process. So these are going to be very fluid markets. You mentioned having stop losses that are tight here. I think if you're going to be trading these pre-election, your normal trade size, whatever that may be for an individual, let's say it's $100 a trade. With respect to some of these Trump cabinet picks and the possibility of randomness like Gaetz introduced yesterday for this market, maybe take a smaller contract size, maybe take a smaller position size, $75 instead of 100, just taking into account that additional layer of risk here in some of the cabinet positions.
Yeah. Let's go back to the main page, see what other contracts might be out there. Again, Kalshi is adding new markets at a pretty fast rate here. So these
they've done a great job. They've done a great job.
They really have. Elon Musk nominated to the cabinet. That's trading now only at 15 cents. I think that looks like easy money. You can buy that no for 93 cents. That looks like a pretty simple 7 cents to pick up. He's not going to be nominated there. Talk about conflicts of interest. That's why DOGE, the new Department of Government Efficiency, has been set up outside of the government. It's not meant to be a government office. I think this is, in fact, this market escaped me. That's an easy 93. Buying the no at 93 cents makes a lot of sense here. I can't imagine shareholders ever reconciling him taking a government position anyways. Again, there seems to be, and these are the inefficiencies that we talk about. This market should be trading considerably higher right now. That no should be 97, 98 cents right now, not 93 cents. Let's see.
Jeff, I think that's a great trade to put us out on, quite frankly, because we talked about this last week. Is he going to divest and put all of his assets into a trust? Is he going to walk away from SpaceX and Tesla? Probably not. And the way that this DOGE commission is set up is it's a blue ribbon committee, no statutory authority, and he doesn't need to divest from his assets there. So it's the easiest way for him to have some influence without actually needing to pull his position as CEO of these various companies. When we talked about this last week, it was, I believe, trading closer to like 35 cents. It's now at 9 cents, and that means you could still make 7 cents over 93 over the next few weeks, which again, rate of return on invested capital, this could be a low-hanging fruit, a lower risk trade
And you could be retired by the end of the year if you repeat this every hour. Can we part with letting me see California House 13 one last time? I want to see how that's doing in real time. And keep in mind, if you watch this on YouTube later on demand, you're not seeing accurate numbers. Okay, this thing is still a dead heat. So there it is. John Duarte I'm long from an average of about 42. So we'll see how that plays out.
Best of luck to you, Jeff. If this doesn't play out the way that you want it to, what's the House composition going to look like this time next week? We don't know.
Right.
It could be a very different conversation. So this market has implications for others. We're going to have to cover that on next week's episode, however, because the prediction trade's out of time. I want to thank everyone for tuning in once more. Remember, always wager responsibly, believe in your math, master your trade, and join us next time on the prediction trade.
Thank you.
We're through inflation data. We're through a speech from Fed Chair Powell. And what do we have to show for it? Perhaps finally some clarity on stock markets. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And we are going to get ourselves ready for the last sprint into the end of this trading week. There's a lot to discuss. There's a lot that's on the menu, and the road ahead might just be getting a little bit more discernible, might just be getting a little bit more clear. So that's what we're going to unpack here as we look at what all of this has given us in markets so far and what may be next. We'll start right with the brass tacks. The next piece of U.S. data closing out the week, that's going to be the October U.S. retail sales report. The expectations here that we are going to get a rise of 0.3%. That would be a slight cooling from the prior month and well within the recent range of outcomes, as we can see here, right down the middle of the recent range that's emerged here. If we sort of look at the latter part of 2022 into 23, there's that big 4.1% spike there as we get some angling around the lingering effects of the pandemic. But soon enough, we settle into a range of basically between down 1% and up 1% over the course of the next almost now 2 years. And these outcomes that are on the menu here for October look very much in line with those kinds of dynamics. The issue here is perhaps less so what the number is. That's somewhat secondary. The main issue is what any number coming out of the U.S. and pivotal to U.S. economic growth is going to mean for speculation, and what lens will that number offer to ongoing dynamics. We can see here, this is a chart we reference all the time because it is a very, very powerful lens, not so much on where the U.S. economy is going, but on how speculative interest is shaped by U.S. economic data outcomes. It's quite different and very powerful because what we see here is that since late August, U.S. economic data has increasingly improved relative to forecasts. That doesn't mean it's been good, which it has. Doesn't mean it's been bad, which it has not. All it means is that it's been increasingly better than expected. And what that then does is inspires a repricing of baseline expectations about the trajectory of the economy, because people that are participating in shaping those expectations, economists, markets, traders, everybody with their hand on actually shaping market outcomes. They have to readjust. They look at numbers that do not comport with baseline expectations, and they say, well, our view of the U.S. economy needs to change. It must be different. We must be trending in a different way. Needless to say, an economy where numbers outperform relative to forecasts, you have a rethink of any dovish expectations you might have of your central bank. And that is precisely what we've seen from the outlook on the Federal Reserve. These are the numbers that we have in Fed funds futures currently. They anticipate a diminished chance of another rate cut in December, but that's hardly the main story. What is the main story is what is on the menu for next year. The markets are now pricing in barely 2 25 basis point rate cuts. They're allowing themselves a mere 30-ish% chance that there's going to be a third one at 59 basis points. So 9 out of 25 basis points toward a third cut has been baked in. But that, of course, is a far cry from where the markets were when the Fed issued its policy guidance in September, or even where the markets had been more recently than that. When we were about to get the start of Fed rate cuts, the markets envisioned 232 basis points in easing this year and next. When the Fed gave the first 50, that's this jump right here, this move, we essentially got to them saying there's going to be 100 basis points this year, 1% in easing, of which half was delivered in one shot, and a further 50 basis points delivered over November and December. They also put out the projection that there's going to be another 100 basis points, another 1% in cuts on the menu in 2025. Well, we have the one cut at 50 basis points. That's there. Just last week, we got to the next cut. That's here. That's another 25 basis points. So we've all but fully delivered on what the Fed had in mind for this year. And we have a slightly less than even chance now of seeing the fourth cut in December. But it is the outlook for next year that has undergone the most dramatic transformation. The markets thought we were looking at 125 basis points next year. The Fed thought we were looking at 100. The markets now see, as we just said, probably 2 with a slight chance of 3, 59 basis points. In other words, the path envisioned just a few weeks ago by both the markets and the Fed has been cut in half because the markets have looked at this economic data and said the Fed is cutting into an economy that is not trending down, but trending better. And what that trending does is it forces a rethink of expectations toward higher inflation and toward less scope for rate cuts. As a matter of fact, we just heard this today from Fed Chair Jerome Powell. He came out and once again, as we discussed on the show yesterday, as we anticipated, reiterated that the Fed is not on dovish autopilot, that they will go slowly on cuts, that there is no need to rush, that the economy is strong. Notice what has happened to expectations for December's policy meeting. This would be no cut. This would be cut. Yesterday, the probability of a cut was over 80%. Today, it's under 60. And so what we end up with, of course, is an immediate reaction from the markets. Is it any wonder that when the Fed begins to cut rates, what the markets do is go the opposite direction? Right here, this top in long-term bonds This is where the Fed cuts 50 basis points and embraces all of the dovish myth-making that investors want them to embrace, with the 100 basis points this year and the 100 basis points next year. Shouldn't that mean interest rates go down? No. Because what the Fed is doing is happening not within a vacuum, but in the context of what the economic data is performing like. And since the Fed is doing all of this dovish posturing at a time when the data is getting better, not worse, the market says, oh, okay, you're pouring gasoline on a live fire. This will be inflation. This will mean higher rates downwind. Bonds come down, and precipitously so, and yields go up. Not surprisingly as well, that exact turning point is where the US dollar turns higher. This is a chart of the euro as a sort of stand-in for the overall direction for the dollar. And of course, what we find here is a situation where just as yields turn up, predictably enough, the US dollar follows because its yield advantage relative to other currencies improves. Not exactly the kind of thing that you might expect from a dovish message out of the Fed unless you took the data flow in context. Incidentally, it is the same thing as what happened toward the middle of the year, except in the opposite direction. Notice here, here's the beginning of the year. The markets anticipate 200 plus basis points in easing between this year and next. And then through to May, that outlook is diminished. It is diminished by, again, about half. What's going on at that time? Well, once again, look at the economic data. It is improving. The U.S. economy is getting stronger since the beginning of the year and into March, April, and then begins to deteriorate before this next leg higher. We'll consider what occurs. This is diminished until the data starts to deteriorate. This is late March, mid-April or so, right here. But of course, by that time, the Fed is saying, oh, well, the economy is doing so much better, maybe we don't have to cut as much. What do the markets do? Do they respond to the Fed saying, oh, maybe we'll only do one cut this year, as they said in June? Or there's been a lack of progress on inflation, as they said in May, because the economy's been hotter? No, quite the contrary. As you start to get from mid-April, give or take, the economic data getting worse, you also get more rate cuts getting built out. You also get, from that very same spot, higher bonds and lower yields, and a weaker US dollar. And so the dynamics here seem clear enough indeed. If we were, going back to the subject in question here, get a hotter retail sales number, it wouldn't so much be the retail sales number this way or that would be the story. It would be that yet another piece of U.S. economic data has given the Fed reasons to back away from cutting rates next year. Retail sales, of course, is no small thing. Household consumption is overwhelmingly the driver of U.S. economic growth. So if this is strong, then the U.S. economy ought to look strong and ought to remain on this path to higher rates. Where this becomes a problem, and obviously we see this as having significantly bolstered the situation in yields, significantly bolstered the situation in the dollar. We might well, were we to get an upside surprise here, get continuation in that direction. But the issue has been, what about stocks? Stocks have been relatively resilient in the face of this so far, much as they were toward the beginning of the year when this readjustment was occurring. And that's because the markets are figuring, well, if the U.S. economy is strong, then perhaps things are going to be okay. This is not a dropping out of rate cuts because things are behaving badly. This is a dropping out of rate cuts because the economy is performing well. Surely that's not bad news for corporate earnings and for stock markets. Well, maybe so. And at the beginning of the year, in the first quarter, that certainly was the story. It may not be that this time. And the key difference here seems to be what's going on with global growth. At the beginning of the year, global growth was firming in tandem. This is the Purchasing Managers Index from S&P Global and JP Morgan. As ever, this functions around 50 as neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And what you find here, here's January, is the global economy is on its way to hitting a 12-month high on growth in May. It is accelerating. So as the U.S. is accelerating, so is everywhere else in aggregate. It is a very different story now. The U.S. is indeed strong. It is accelerating, but the global economy has been slowing since May. Moreover, in September, it hit an 8-month low on growth. In October, only saw a mild rebound. This, of course, is very challenging in an environment where the ubiquity of the U.S. dollar, as we've said many times here on the show, according to the data from the Bank of International Settlements that tracks these things, close to 80 to 90% of global monetary transactions are settled in the U.S. dollar because of its absolutely unrivaled liquidity. Even countries trying to transact between each other and not with the U.S. can find it cheaper to transact first from their currency into dollars and then into whatever other currency they want rather than bilaterally, because the dollar is just so liquid and so ubiquitous in global commerce. What this means is that when the Fed is expected to be stingier with rate cuts and yields rise, that doesn't just increase the cost of borrowing of dollars. In increasing the cost of borrowing in dollars, it also increases the cost of borrowing, period. Full stop. Everywhere. Because dollars are the ubiquitous medium of exchange. So when you get this rise in U.S. rates right here, you also get a rise in global rates. This is an average of Germany, the UK, Australia, and Japan, just to give a sense of the major economies. Moreover, we're going to get data over the course of the next 24 hours that may reinforce this. Needless to say, we're biased higher, seemingly at least, for an upside surprise on retail sales, but we're also going to get data out of the UK, where we are looking for GDP to accelerate from 0.7% to 1%. And here, the path of economic surprises has pointed in the wrong direction. Here, things have been deteriorating, implying there's a downside surprise risk here. Likewise, we're expected to get economic activity data out of China. Industrial production and retail sales both seen posting slight improvements in October. And the story may well echo the numbers we got last week from China's trade report and Caixin PMI data, which on the one hand showed that export demand was surging, while domestic demand remained anemic, and tied that surging export demand to something very short-lived, expectations that the incoming administration in the U.S., the Trump administration, will slap tariffs on China, and indeed will slap tariffs on everybody, but single out China in particular, and that importers then that are going to be struck by this, because make no mistake, it is importers that pay tariffs, not the country of origin. There's no way for one sovereign country to coerce another to pay it a tax. That's not how taxes work. What the tariffs do is they impose what is essentially a sales tax on imports. And so importers that anticipate they are going to face higher tariff barriers and therefore face higher costs to import things from China, they've apparently rushed in to try to build up as big of an inventory ahead of this as they can. They're trying to front run the tariffs. So what you might see here is robust industrial production growth that could surprise higher, but anemic retail sales, which might surprise lower, following on from another soggy set of consumer price index numbers out of China released over the past weekend. So on balance, you might end up with strong U.S. retail sales, a weak story on GDP out of the UK, and an ephemeral story out of China, which ultimately yields back to an economy that hasn't done much by way of growth since emerging out of COVID restrictions and is looking at now 6 consecutive quarters of economy-wide deflation, implying there is no demand to speak of. All of this, of course, makes this situation more acute. We just got U.S. CPI data earlier this week, which underscored yet again that U.S. spending is focused on the domestic service sector. The firms there are not going to spill over by way of demand to global markets. U.S. Imports are focused on goods. So U.S. Vigor is not extending to other economies because most of demand is on domestic service goods and domestic service firms, whereas global firms that import into the U.S. are largely not seeing it, which is why the global economy is slowing even as the U.S. is as strong as it is. That would comport with strong retail sales numbers, but also with ongoing divergence where Europe and China, the other major engines of growth, continue to be anemic. And that's certainly not a happy thought at a time when this dynamic, because of the repricing of the Fed, means that those anemic economies have to face the chokehold of rising borrowing costs. And this is where the situation gets spicy for the stock market. We saw this week stock markets wobbled the day before CPI around speculation that the number might be higher than expected. It wasn't. It came out exactly in line with forecasts, but also marked the 4th consecutive month that disinflation didn't happen, and thereby encouraged a combative Fed. When we got the Fed chair, Jerome Powell, speaking today and channeling that combative mood, stocks fell. So there is seemingly the early sense that stock markets are getting worried about this, and of course they are. If we get a rise in global borrowing costs, even as the global economy slows, the improvement in the global debt to GDP ratio, this thing right here, that makes this growing pile, and indeed a record pile, of global debt more digestible and more financeable, that might be going away. The bout of inflation, if it had one positive, was that it helped inflate away a bunch of this debt burden, making it easier to surface. Well, it'll be much more difficult to service if this starts to go the other way, stressing credit markets and economies and market-wide sentiment. This may well be what stock markets are finally going to get afraid of. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be back with Chris for Futures Power Hour tomorrow. And again on Monday, I'll be on with Victor Jones and Tom for First Call on Sundays, back with Victor for The Price of Truth on Wednesdays, writing for the News and Insights portion of tastylive.com, and commenting on the platform formerly known as Twitter and on Blue Sky, both at Ilya Spivak. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back next week. Take care.
Hello, everybody, and welcome back to Bad Taste. My name is Julia Spina, and joined with me today is my co-host of Bad Trader, Luis. Luis, thanks so much for joining me today. How are you doing?
Good, awesome, Julia. Thank you for having me here. Subbed here for E. Happy. A lot with the market. We had a good stream today. But how are you doing today, Julia, with portfolio?
It's seen better days. We were technically green, but kind of Boeing is giving me a little bit of grief right now. After a lot of that craziness from last week, I kind of cleaned a bunch of positions out, kind of ate the loss, and I wanted to give things a little bit more time to sort of develop before deciding to get into something. I put on a trade in XOP, but that didn't get a fill. It's got an IV rank of 25. And as far as getting some ETFs with this kind of exposure, this one is typically what I go to, even though it's not the most liquid in the world. Boeing, but yeah, giving me a little bit of grief. But, as far as Boeing goes, it could be a lot worse. And otherwise, my portfolio is pretty lean. I know you're in DJT and MNQ are your two right now, right?
Yes, I actually closed. I took profits on MNQ short that I had around 21,000. So it was a good trade overall for today. Good profit for DAT. I'm in there. It seems like it was recovering a little bit at the end of the day, but almost like the last 15 minutes sold off just a little bit more. So I'm happy with DAT. Honestly, can't wait to just get a break even. My break even price right now is around 22. So I don't know. After not being able to continue with the rally since last week, it looks like finally investors or traders are realizing the real value of DAT. And I'm going to hold it for longer. I'm going to hold it, eyeing maybe the September low of 12, but I know it's a risky trade.
Yeah, ballsy for getting into it. DJT has been selling off again, it's not surprising to me. I'm fully expecting it to drop even more just based on the company's fundamentals. But I kind of thought the market would stay a little bit more optimistic, at least for a longer period of time. Where they are certainly not optimistic is actually Tesla. Today dropped almost 5%. Tesla in full Tesla swing. I've been digging because there's been some really interesting sector movement. I'll talk about, I'll show the heat map in a little bit. We've seen some drops in healthcare, drops in Tesla. A lot of that is actually down to Trump's policies, in this case around potentially axing the EV credit, which, dude, the irony of that.
I saw that. I was surprised. It seems like how much can there be, friends? Or let's see what's going to happen with that. But definitely a really big credit that the Tesla owners got, 7,500. So he's going to exit. And Tesla dropping. Also, Rivian. Did you saw Rivian today?
I did not see Rivian.
Rivian gave all the gains back. I'm guessing it has to do as well because of what Trump said. So who knows? And with your bond position, now that Elon Musk will be in charge of the Dodge with someone else, I forgot the name. Boeing actually seems that to be one of the stocks that will be most impacted if Musk decides to do something with the government spending, because last year they received around 30% of the revenue from the US government alone. So I'm not necessarily so surprised because of that. Honestly, I would like to see it a little bit longer because I'm looking to add some momentum trade there to the long side, but seems like eyeing maybe it's support around 125 from what I've seen around the lows of 2022. That might be something affecting Boeing, but I'm not quite sure necessarily. Also, planes falling and all that stuff, pretty looking bad for Boeing.
Might also has something to do with it. I know that government grants make up a lot of R&D, even R&D when I was in school. A lot of it was funded by the government and different government entities, that kind of stuff. So I'm very curious to see what happens with research funding. But also we did hear about the soap dispensers, I believe, and that ridiculous upcharge, right? And that was Boeing, right? Remember correctly?
Not quite sure.
I'm going to look up the article because I don't want to misquote it. But yeah, Boeing, it's falling out of the sky as usual. Dispensers, and that one's giving me a little bit of grief. So this came from, so this is Newsweek. I'm going to pull this up real quick. This was from October 31st, very spoopy. Boeing gouged Air Force with 8,000% markup on soap dispensers. So when you said, Elon Musk might be, targeting them, or this, new Department of Government Efficiency might be affecting Boeing. This was the first thing I thought of, this news, if anybody kind of missed that.
and it's actually recent. I was not aware of that. I'm going to look into it.
This was pretty recently. Air Force overpaid by almost 150 grand. This amount for undisclosed amount of dispensers. So it's almost an 8,000% markup. So, and you know what? Oh, Boeing. They never cease to amaze me.
Yeah, no, me neither. And if you've watched, especially the documentary from Boeing on Netflix, maybe you even get a little bit more like a hate towards them, because it's unbelievable that they actually rolled out a new plane without proper training to the pilots just to save more money for their investors. And I think they deserve what's happening. And I hope for the safety of all of us who actually fly are able to actually work all of the problems they have. Also, with what happened to the whistleblowers, I was not aware of the soap dispensers. Makes me rethink being Long Point.
Oh yeah, no, I don't know. I just feel like we've just been, I don't know. So just we could make a whole expose about all the bad Boeing news from the last couple of months. Yes. But this one did come to mind when you brought up it potentially being significantly affected by this targeted decrease in government spending. But that being said, Data Trader, they're really nice soap dispensers for what it counts for. Mind power, it seems like Boeing is untouchable. Honestly, I talk about this a lot. It seems like the worst news could come out and then the stock price will just do nothing. I've seen that at least a couple of times. So anecdotally, kind of notice that as a trader. But what are you going to do? The other interesting thing that I noticed, I'm going to really quickly pull up my heat map of the day. There we go. So this is the S&P today. All in all, we actually had a pretty moderate day, at least in the indices as a percentage. We were down like 0.6%, well within the standard deviation move, but a couple sectors and a couple specific companies got especially hit. Healthcare, I have a thing on that. I found out at least some of the vaccine companies are down. At least from according to the news. Tesla got hit especially hard today. Apple had a fairly green day. Google a little beat up today, and then some industrials. Lockheed Martin dropped quite a bit. GE dropped quite a bit. That didn't surprise me as much as like the healthcare. I'm like, why is healthcare down as much as it is today? And from what I could find, this is like news that I kind of found out after the close. Let me pull this back up. Apparently, at least some vaccine stocks seem to be down because RFK is going to lead the HHS, right? And he has talked about removing vaccine requirements. Basically, I don't know exactly what it's going to entail, going to look like, but a lot of these vaccine companies, Moderna, Pfizer, Novavax, took pretty big hits today off that news. I didn't realize that until after the close. I thought it was a bit weird that healthcare was down as much as it was today.
Yeah, actually, I was seeing it lately, and we discussed about HIMS as well, maybe because of Amazon entering on that space as well. What a bad day for HIMS stock. But then I was not aware of also RFK Jr. He's been actually appointed into that he's actually a skeptic on vaccines. So maybe Moderna has just been crushed lately a lot. I think it actually reached lows of I don't know how many years actually. It's trading at around 40. So maybe tomorrow we can expect a little bit more pain to that side. And Pfizer as well, trading around 26. Look at Moderna.
They do more than Pfizer does more than vaccines. Well, after all. But yeah, I mean, huge fall from grace, especially for Moderna. This is it's still very much a biotech company, even though it's kind of a household name now because of the vaccines. There we go. It is still very much a biotech company. I believe they IPO'd in like 2019, 2018, something like that. So with a lot of those sort of newer biotech companies, you just have a lot of product risk. Like your success, a lot of your revenue depends on the success of one product. So obviously that's being felt here, but it was evidently across, just the whole healthcare sector was having a bit of a rough day. Eli Lilly and HIMS as well. We've been talking an awful lot about HIMS, but this is affecting Eli Lilly. We have a new player in the game, evidently, with now Amazon is using their One Medical service. Let me try to. Nope, there we go. Amazon is using its One Medical service to basically compete with Hims and Hers, which, I mean, Hims and Hers, they've taken off this year, and a big part of why is because they've created generic versions of different types of medications, and they've moved into the GLP-1 space recently. So evidently, this new Amazon competition is giving them a run for their money. This is right after they also announced, I believe it was yesterday, that they're going to produce or they're going to create a very low-cost service to compete with Temu. So a whole lot of toes Amazon is stepping on these days.
Bank of America jumped right away to the opportunity and just lowered HIM's price target from 32 to 18 today, citing the potential threat from Amazon. So they were the first bank. So I'm guessing that added more pressure to HIM's stock. But what a slash on from 32 to 18. And they just reported earnings, and they had really good earnings.
They did, yeah. Oof. Yeah, but that's ugh, my goodness, such a fall from grace in 2 days. Holy shit. So yeah, a lot of news about that today. Really interesting movers in the market. We've had some other news that we talked about earlier today on stream, like the Onion buying InfoWars at an auction. That was some wild news, as well as the raid on Polymarket. But yeah, maybe we can hop into some of. I know you have like some filings that you want to talk about, so we'll hop into that in a second. I want to make sure there's time. Just looking at some of the companies that have reported right before, Cisco dropped 2%. Disney had a very good day, up 6%, although it opened a bit higher, so it looks like it sold off a bit. Lunar did not go to the moon today. Quite the opposite, actually, down 13%. And then our Chinese companies, Billy and JD with Alibaba reporting tomorrow before the open. Very curious to see how Baba reports, but I kind of, unfortunately, not super surprised about this. We went through the earnings report earlier, but yeah, I have trust issues when it comes to Chinese companies. I feel like one piece of news can completely introduce like a ton of volatility, very sensitive to that kind of stuff, especially around like domestic policy in China. So
it got me thinking with China and some of the movers, which I'm gonna get, but now that you have that platform, well, I'm just gonna touch about 13F filings from 3 investors, but from what I've seen, many of them actually added heavily into Chinese stocks, especially Baba, JV, Baidu. And actually, I've seen no base movement on those stocks, just like for also Warren Buffett's 13F filing came out, and Domino's Pizza and Pool, both those stocks are actually jumping after hours, because it seems like Warren Buffett, their new 2 additions was actually Domino's Pizza and Pool.
Whoa!
That's Warren Buffett effect.
Yeah, Buffett effect. I had no idea. What the? Okay, so Domino's Pizza. What was the other one? It was Whirlpool. You said.
Yeah, Pool.
That was the one that SMCI replaced, right?
No, SMCI replaced Whirlpool.
Oh, never mind. This is just regular Pool. Oh my God! Talk about the Warren Buffett effect.
Warren Buffett effect. They sell a lot of equipment for cleaning pools, constructing them, and that kind of stuff for pools. But yeah, it's still down. I think 10% year to date, but. Talk about the Warren effect, and I have not seen none of the like Michael Burry effect on none of them, because I don't see Baba jumping, Baidu jumping. Sure, they're waiting for their earnings tomorrow, but those are the stocks that are jumping after hours after Warren Buffett disclosed his 13F filing.
Oh man, Pool. Who would have? Why? Pool. He's a big fundamentals guy. He's a dividend. Oh, it looks like Beto actually did cut their dividend yield in half almost.
We missed
down to 49%. Yeah, we missed it. Oh, right before the crypto rally. It's unfortunate. Why was Pool the highlight of his? You know what? Actually, let's just get into it. You want to get into it?
Yes, I'm not sure why he actually bought Pool or what was his reasoning, but that's actually a good question. Dominic, this I understand. He loves Coke, he loves McDonald's, he loves all that stuff, but Pool, like, is he bullish on people having pools? That actually popped during COVID because everybody was at their homes and just cleaning their pools and being in them all day long. Not any longer.
That makes a little more sense. Like the Coca-Cola, McDonald's, like that kind of tracked intuitively. The pool one I kind of don't get. Domino's Pizza I get. And Mind Power is upset because they were going to buy Domino's Pizza and it just jumped like 40 points. Oh, that's so funny. Yeah, dude, that's crazy.
Do you know how many cans of Coke does Warren Buffett consumes a day?
What's a normal number? More than that. Let's say 3.
3. He consumes 5 cans of Coke a day, Warren Buffett.
How is he alive?
He's like 6 years old.
Is that the secret?
Yeah, no. And he always has breakfast of McDonald's. And depending how the stock market opens, is depending which 3 breakfasts he's gonna have. Like either the $1. I don't know how much they are over there, but that's from the HBO documentary Warren Buffett. It's worth watching.
5 cans of Coke and McDonald's every day. This is the doctors hate this hack. Oh, never mind. Let's get into it. The Warren Buffett effect is evidently Warren Buffetting. Quickly, Applied Materials donked. We'll maybe hop into that if we have any more time. ASTS, another space exploration stock, also donked, as well as Oklo is down a little bit after earnings. They have reported today. But first things first, before we get into filings, we do have an app. We made some sick updates. If you want to come find us, we're in the App Store and the Google Play Store. We got a fun community in there. The trading interface is super cool. You can connect your brokerage account, and we would love to have you. And then as well, if you want to come chat with us, feel free to come find us on Tasty Live's YouTube channel at Tasty Live Show. And if you want to follow us on Twitter, Luis does a great job managing the Twitter. It's @TraderApp, I guess on X, formerly known as Twitter. So 13F filings. The Warren Buffett effect is in effect. Tell us about it.
Yeah, so Warren Buffett 13F filings, what he did, it was just reported right now. He has right now around 260 billion assets under management. His newest additions were actually Domino's Pizza, DPC, and Pool, as well as we already saw. They're jumping after hours. His biggest top 5 positions: Apple, AXP, American Express, Bank of America, which he has been trimming since May. Apple and both Bank of America, Coca-Cola, 10.7% of his total portfolio, and also Chevron, CVX. Top sales were actually Apple as well. People were surprised that he keeps on selling Apple, which on May, he just recently said he was not going to be selling his position unless he saw some drastic changes. He has not disclosed which ones he saw, but he has sold Apple, Bank of America as well. He has sold around $8 billion. LSMX, that ticker, I don't know which company it is, and also FND. He also sold FND, Floor and Decor Holdings. He used to be quite a big investor in the decor kind of business because he used to own a lot of HR. I think it was like a company that makes like things for the house. I forgot. I forgot which was the ticker. But yeah, he's selling on that. I'm very curious why he actually got into Pool. But yeah, $260 billion assets under management, quite big. Only 2 new stocks he purchased, added to only 2 stocks, and sold 3 stocks. So this is a major movement from Warren Buffett, and I think, as we already saw, he's has his Warren effect on the stock. So might expect some movement tomorrow on those.
Evidently, yeah. I was wondering why Chevron was up so much today. It was up I think 1.5% compared to the rest of the energy sector. It was a bit of an outlier, so that makes perhaps a bit of sense why. Also, quickly before we move on, I know Oklo is a ticker that you've looked at before. Do you have any thoughts on it? They did just report they're down $2. But do you have any thoughts on it that you'd like to share?
Yeah, I've seen that there's been a lot of movement on the nuclear energy related companies, but I think that Oklo is participating because it's in that segment and it's basically owned by Sam Altman. So if you think that ChatGPT is going to actually get nuclear energy, you can bet it's going to be from Oklo because basically the 2 same CEOs almost. But they have not announced no major alliance with a company like maybe an NVIDIA or a Dell or Intel or other companies. Like the other companies that have been announced partnering with recently other major tech firms have popped to the upside. And it's a very new company on the market, just recently IPO'd. Haven't really even looked at their earnings, honestly. So I don't know. I've only traded Oklo to short it a little bit. It's been almost doubled since, what was it?
I was going to say, it's had quite the run up.
Yes.
It's had quite the run up. But that being said, we've seen a number of different nuclear stocks or stocks that can provide some degree of nuclear energy, not that they necessarily provide that source of energy, just pop off of tech companies announcing that they're starting to transition to that source of energy, especially small modular reactors. So I would expect that while I don't know. I've been sort of like bullish on the sector since the revitalization of 3 Mile Island, just in general, especially, if a tech company has announced that kind of partnership. We've seen that from like Microsoft. We've seen that from Amazon, as well as some other names. So, but that being said, the expectation is more of a long-term expectation. For the time being, it actually seems like maybe, especially now that it's, down after earnings, maybe something more neutral would be interesting in here, especially because it is very liquid, and an IV index of 166%. is I mean, not bad on a $24 stock. I guess now $22 stock. But it's got a decent amount of open interest. It seems more than tradable, but a lot of my directional expectations around something like this are just a bit more long term. But yeah, I don't know, Luis.
They missed earnings from what I'm seeing. 0.08 miss versus 0.03 expected. So they lost money, around 63 million net loss for this quarter alone. They're very new and not very much coverage from what I've seen. Only 3 analysts cover it, and on the upward revisions for their earnings, only 1 upward revision over the past 3 months. So it's rare to see it with a stock so popular over the past weeks. Maybe it's not too popular between banks or analysts as well. So I don't know, for taking a trade, I prefer to stay out of it because it's being on the trades that I just felt with DJT that are so much in focus right now. You can get whipsawed, and I felt the DJT, and I prefer to stay out for now.
I think that's fair. I think with something like this, it might be a bit more speculative than a more established energy company that caters to the nuclear space, which we've seen so many of, especially you get highlighted in the past couple weeks. But let's go ahead and move on. Hopefully we have time for a trade. I haven't looked at it yet.
Oh, yeah, it will be cool. Well, for David Tepper, also the owner of the Carolina Panthers and the owner of the Appaloosa Management Fund, hedge fund, he also took big positions on Chinese stocks. He's not the only one. A lot of many traders took some positions. He increased on PDD and JD significantly. His top 5 positions are actually now BABA, almost 16% of his portfolio, PDD, Amazon, Microsoft, and Meta. He manages around 6.1 billion right now. He has a net worth of 23 billion, so he's a big player. Like I said here, for example, one of the top buys was Vista Energy. They're also getting to the nuclear. So maybe if you want to get into the nuclear energy business, maybe with a more established company like VST. So he bought PDD, EST, JV, and energy.
CEG is another one, kind of more established nuclear company. Flower Power brought up a great point over in the chat, which is that I think their reactors are not approved yet. So there's a bit of regulatory uncertainty there, specifically with their designs. There are more established nuclear companies that have deals with major tech companies. Yeah, like you said, like VST, CEG was a big one. I believe they partnered with Amazon, right? I believe. But yeah, the options on it are very liquid, but it's just at this point seems like a highly speculative trade. So sizing, I think, is especially important in there.
Yes.
But cool, very bullish on China from this.
Yeah, and he sold you said about Lam Research, LRCX, one of the holdings he actually sold, top sales. They just reported today, and they were dropping, but they're not down so much. And last but not least, Julia,
of course,
Michael Burry, one of the favorites of from the movie The Big Short. He's also very bullish on China, but he makes something different.